good uncut
Yeah, it usually takes me
Barbie
3
patterns.
days to go through and look up everything to see when the prices change.
This is my best friend book by category by price. This one is
It is.
something about shady.
You know, she's trying to.
And then and then, oh wait. My granddaughter, I took that one out. I was on my, in July.
Oh. Thinks it's offline.
My granddaughter last
I got a new wireless router, but I haven't installed it yet.
You got a new wireless router?
Yeah, I just haven't installed it yet.
Cool.
Because the one we have is like super old.
Are you reading the standard deductions on OBA the same way I did? That the standard deductions as they sit for 2025 are there until 2028?
Yep.
They're not increasing them?
You're not?
No. The way I read it from OBA is those standard deductions are set through 28. So 25, 26, 27, those
But our
tax
taxes
years,
are gonna keep going up.
those, well, no, because the tax brackets are supposed to remain the same.
No, what I mean is, he's gonna still do more shit, more tariffs, more higher egg prices.
Yeah, but that's not income tax, so let's
No,
move on
but-
from that.
Yeah.
Still,
I don't have
I did read it that way, but we'll see.
We'll see. That's what I'm thinking, but I was just wanting to make sure it's on the same page.
Especially when you get to what the landscape might possibly look like when you get to 26, 27.
Yeah. Yeah. Midterms. Yeah. I still love the fact that they're floating the idea of we're going to bring in enough on tariffs, we're going to do away with income tax.
Again, all you did is just rearrange things.
Yeah.
Because who's paying the tariff? Let's hear. Is it the foreign government? No. Is it the foreign corporation? No. Is it the domestic corporation? No. They're passing it on. Is it the wholesaler? No. They're passing it on. Is it the consumer? Well, yes, because the buck stops here.
Right. I mean, ultimately, if China sends in $1 billion worth of merchandise with a 50% tariff, they have to pay $2.5 billion for that to come into the United States. Now, China is then turning around and inflating the cost of each of those items to each of their distributors and wholesalers,
Yep.
who are inflating the cost to their end market, who's inflating the cost to us.
Right.
It's-
Now you figured it out. You don't have a degree in economics like I do.
Well, to me it works the same as as an S corp.
Mm-hmm.
Everybody comes up and says, "Oh, well, that corporation, they're not paying taxes. They're not paying their income taxes." Yes, they are. They're just doing it as a pass-through. They might have $1 billion in profit, but if they're funneling that $1 billion in profit out in dividends to shareholders, then they take $1 billion tax deduction. So they don't have any taxes.
It's not a tax deduction, it's an expense.
It's an expense, right? But so they don't have that $1 billion of profit. But the 250,000 shareholders do, because they got a portion of that $1 billion of profit. So yes, there are taxes being paid on it. The corporation's not doing it. All of the shareholders that own the corporation are doing it. That's why I get infuriated when they go on there and they say, well, Microsoft doesn't pay anything in taxes. The corporation might not.
That's true of any corporation. Let's just go on.
But the
with that.
shareholders do.
Alrighty. This is a fun chapter. What are you allowing?
It's just us. Everybody's missing.
Well, if she's coming, she's always late.
Yeah.
Sergio, I'm not sure. And then I know she's coming tomorrow night. And then that Amy Greeno who usually sits here, I don't know where the hell she's at.
You're funny.
Okay, so
We're segregated.
Chapter 7, Standard Deduction, Itemized Deductions, and the Income Tax. Like I said, this is the fun chapter because we're going to talk about itemized deductions. And if you get a chance to use it, sometimes there's a lot of there's playtime. So let's see what we got going on here. So this chapter, again, we're going to talk about the standard deduction, which is the numbers on here aren't the ones that we have. We know that we know what they are. We're going to talk about Schedule A. And when we get done with that, we're going to talk about income tax. How to look at a tax table. And how to figure income tax. We also mentioned some capital gains and just overall tax rates. We're going to hit on who can use the standard deduction. What it is, depending on filing status, of course. Determine when it's advantageous to itemize. Obviously, if I beat the standard deduction, it's advantageous to itemize. Learn the various categories of itemized deductions and how to prepare a Schedule A. Master the use of the tax tables.
Yeah, he walked that way, and then he's walked back this way.
He's going. He continued on that way. Qualified dividends and the capital gains worksheet. We've already talked a little bit about capital gains. So, basically at this point, for the most part, we've talked about all the various ways that you can get income. Now, there's some things that we haven't mentioned yet. I mean, self-employment, farming income, K-1s we haven't really gone into. But for the most part, we've covered it. Covered the most common ways to make money. So after we combine all our taxable income, subtracting any adjustments that we have, which is still a future chapter, we arrive at our adjusted gross income. And for the most part, our adjusted gross income is also going to be more or less our taxable income. So step one, what they want us to do on the flow of a 1040 tax return, take our total income minus our adjustments. That's our adjusted gross income. Take our adjusted gross income and subtract our standard or itemized deductions and cube it, which is also a future chapter. That comes up with our taxable income. Step 3, figure the tax. So take that number and run it back to the tax tables. If it's below $100,000 or if it's $100,000 or more, run it to the tax formulas and come up with how much you owe in tax this year. And then hope you have enough in credits and other things to pay for it. So on our 1040 form itself, we're basically at the bottom of page 1. Now, like our standard deduction, I'm not sure that I talked about it more in class. So I did talk about it in class. Okay, so our standard deduction generally depends on our filing status, whether or not you're 65 or older or blind. We've already talked about this before. Remember why I said we go through the first chapter so fast because we keep coming back to the stuff that's on those chapters? Here we go again. Whether or not you can be claimed as a dependent on somebody else's tax return. Now this is an old paragraph, but let's go down to the standard deductions. Right now, the updated numbers for our Single people, the standard deduction is $15,750. Not that 14,600.
Get an extra pack of papers,
Pack of papers, what?
a printout, so we can make.
Yeah, I got plenty.
We can make a notational change.
Here you go. Here's a couple of chapters. Well, I have some up here. You can just replace them. All right, that's $15,750 for singles. The new head of household, the standard deduction is $23,625.
PC English. Ah, for here. Okay. You said he knocked the wall out and expanded the attic. Yeah,
I think that's a little very long. I don't think.
Yeah.
which is
You might be able to put a hole in it. And a
Put a door
doorway.
he just
Yeah.
said you guys. He said that's coming open. You guys want to expand? I'm like, yeah, no, I don't think so. I think we're all right. So, but he was curious as to what was going on because he saw the plywood over the door and he hadn't heard about the break-in and whatnot.
2 in 2 weeks.
Oh, I told him
3 in total,
I
right?
told him I didn't know
One
that
in January.
that I know that there was that they had 3 break-ins in as many months.
Yeah.
So
Well, but that's the nature of their business, not necessarily a reflection of the area, although I don't trust the area either. But
right,
in this case, it's a reflection of what was inside.
right, and that's what he was asking because he asked if we had that kind of problem here at this office, and I'm like, no. I said, but we're a tax office and
We don't have cash.
we don't have a lot of cash, whereas they've got the vapes and all of the products plus cash and whatnot. So
Yeah, and it's an issue citywide. Tritton said they've got 2 stores on the east side. They're constantly getting overrented.
yeah,
So,
All right, so continuing on with the new numbers, our married filing jointly people are now up to $31,500.
woohoo!
Remember, that represents the amount of money I can make, or myself and my wife can make, before I owe potentially owe $1 in tax. I keep our income below those numbers. Do I have a filing requirement? No. I might want to, but I don't have to.
Makes me wonder if a lot of the older people, because they're under maybe under their filing requirement for earned income, and their Social Security is not necessarily taxable. If with this, because I mean, if you think about it, 65 and up, if both couples are 65 and over, that's another 3,500,
Yeah.
1,750 this year for them, right?
Yeah, yeah.
So that's
So
another
they have
that's
on
another
the
3,500. So that means
Then it's
their
$1,750.
standard deduction is going to be 35,000. So if they can keep their earned income and half of all of their Social Security benefits under 32,000, none of the Social Security benefits
Or
are
taxable.
taxable, and if their earned income is well under the 35,000, I'm wondering if we're going to start seeing older couples eliminate their withholdings on, especially like on a pension plan.
Well, I mean, at this point, you should. So, I mean,
Yeah.
as a tax preparer, I hate doing this because it eventually costs me business. But these people that might actually get to that point now, you don't need to have withholding. Stop this.
we do that.
Yep.
Yeah, but by that time it's already March, so you're already 2 months, 3 months in.
And I just tell them you're going to have to file,
You have to
One
file
more
next
time.
year, and then
but after that, no more.
however long it takes you to get your paperwork through.
Yep.
But we do that. Because a quarter of those people will still have to keep coming in because do their homestead. You're not eligible to take the standard deduction if you are married filing separately and your spouse itemized on their return. your spouse itemized and you're married or filing separately, then your standard deduction is whatever you can prove, and it might just be the sum of what that receipt is in your glove box for what you paid on property tax on your car.
Get that old gold dip.
That might be all you can prove. That might be all you have. Now, if the spouse is head of household, considered unmarried, and they itemize, that's a loophole.
Yes. Yes, if the spouse itemizes and the other spouse can be considered head of household because they've been separated over 6 months and she or he has dependent children, then they don't have to itemize.
Right.
They can take the standard deduction and claim head of household.
Or the other way around.
Right.
The spouse that did that would be married filing separately. If the head of household spouse itemized, you get away with it.
He doesn't have to itemize.
Yeah, because she wasn't technically married filing separately.
Right.
You don't take the standard deduction if you're non-resident or dual status alien during the year and not married to a United States citizen or resident at the end of the year. If you're here working on a student visa, eligible for work, you don't get the standard deduction. Because you're not a resident. Standard deductions are reserved for residents, citizens. Now, again, you can take itemized deductions if you have any. Chances of that happening are pretty slim, but it's a possibility.
Define dual status alien.
Dual status alien would be somewhat similar to my Canadians. They're both United States citizens, but also a citizen of another country.
So they can't take the itemized deduction.
Except that in this case, they can, because I'm doing married filing separately for them, and so I just file them as U.S. citizens for that.
So if you have a resident alien who's legally in the United States, but has an Israeli passport or a British passport,
Right.
but is legally in the United States, they're considered a dual status alien.
No, they're not really considered dual status because they're still just a citizen of that other country. This is referring to be dual status, you're kind of both.
Is that
But then
requiring a
doesn't that-
visa?
But then doesn't that negate and not married to a U.S. citizen? If I'm a U.S. citizen and I'm a citizen of Canada, then that statement is null and void. I'm a dual status alien. I don't ever have to worry about it because I am a U.S. citizen.
True. But the dual status alien is like you're in the country, but you're not. You have dual status. You're a resident.
Resident
you're a
alien,
citizen.
but I'm a citizen of another country.
Right.
Okay.
Is that like with having a visa?
For some countries, yes, that would be what.
Because I
it
know,
takes.
like, there's two guys I follow on Facebook that they've been talking about they're trying to get their visas for here to stay here permanent because they've been coming.
Coming and going, yeah.
Yeah. and
What
then
only
other-
costs what? 100,000 million? I can't remember what that gold card costs.
I don't know.
Yeah, but my Canadians, I don't worry about it because they're citizens first and they're married.
Right.
So, I mean, it kind of, like you said, it negates it. But then I also do married filing separately for them because I don't want to have to worry about reporting all of his Canadian income when it doesn't, when I don't have to. Otherwise, it just causes a bigger problem.
Now, is he a U.S. citizen?
No,
Okay. Okay, so she's the only dual.
she's the only dual. He's Canadian.
Okay.
Children are Canadian. Although they're technically dual status, they can get Social Security cards
Mm-hmm.
if they applied for them.
Big do all that.
They can never be president. They were born internationally.
But under that, you could, well, yeah, but then you've got to claim the, but you could also take foreign housing credit like you do for your guy in Dubai,
It's way different. I mean,
plus all of the taxes that they pay to the Canadian government.
yeah, I
File-
would be uncomfortable doing the housing exemption just because they're actually citizens of, or I mean, at the end of the day, they're citizens of that country. So I'm not so certain, so keen that the IRS
that would work,
want
that
to
fly.
accept that. Because you're really towing the line on that. I really don't think you can get away with it long run.
Okay.
Dual status. You're a dual status alien if you're both a resident alien and a non-resident during the year. There's a difference on that resident and a citizen. Those are two different statuses.
I'm still another.
Either case, your standard deduction is 0, and you have to itemize if you have anything. $65 or older and/or blind and not claimed as a dependent on another return, you get even higher. You get a bump up. You're considered 65 on the day before your 65th birthday. So you can take the higher bump up on the standard deduction if you were born before January 2nd of now 1961.
It's getting closer.
Getting closer. You're entitled to a higher standard deduction if you're blind or partially blind at the last day of the year. Means that you can see no better without assistance. 10 or 2200 in your best eye.
With glasses.
Like I said. Or, yeah,
You said without
with help.
assistance.
No, it is with help. Yeah, my
Yeah.
bad.
You're blind if your best sight is 2200 with glasses.
Or
contacts,
your field of vision is 20 degrees
or less.
or less. If they're not totally blind, must have a certified statement from the eye doctor or registered optometrist. If the eye condition is not likely to improve, the statement should actually state that. So the hilarious part here is that we can talk about permanently and totally disabled, but it's a year-by-year basis.
Permanent, but year by year.
Exactly. You can start taking it, but then even if you're expected to get better, it's just going to be a period from now. Guess what? So, I mean, you can have that, macular degeneration, and you could be losing, and then you get the shot, and then it thinks,
Nothing.
Just ask Linda about that sometime. She gets the shot.
Ron's dad.
I don't even want to know how they pull that off.
Right in the center.
I can't even picture it.
I don't know. My dad's got it, and I haven't heard anything about him getting shots to lessen it or whatnot. But then again,
You don't have the right one.
as hard-headed as that man is, he probably decided that to screw it.
Yeah. So here's the table of the bump ups for being blind or 65. Knowing that the numbers are wrong.
Yes, those are last year.
And then I will point this out. Notice that the bump up for the age is different for the single people as opposed to the married filing jointly, or the married people.
Do you know what those numbers are now?
I don't have it.
1750 married filing joint to 2050 for singles.
That probably sounds about right, but I'm,
It
for
should
some
be in,
reason
it
it's
should
not
be in your
on
UBA
here.
stuff.
It's not.
gonna
It's
be a
not?
question.
It's not here.
Yes.
All right, give me a second.
I printed out that original packet. Now they've updated it since, but right now I don't have the updated number. Higher standard deduction is granted based on the age or blindness of the taxpayer and spouse only. It does not work for dependents. Standard deduction for decedents are the same as if they had lived for the entire year. However, if the taxpayer died before their 65th birthday, even if this is the year that they would have turned 65, if they didn't get to the day before their 65th birthday, you don't get it. Which kind of sucks.
Okay, for singles or head of household, it's $2,000, and for married couples, it's $1,600.
Singles and the head of household.
Single and head of household is $2,000 if you're over 65 and or blind. And for married filing joint, it's $1,600.
Marrieds. Because it's the same for the separates.
Married filing separate, that should be under single, isn't it?
It is not. Married filing separately is the same number as the joints.
Okay.
And unless they changed it. But currently, our previous information says no. They get the married rate, whether it's joint or separate.
Right.
They would be the marrieds.
So for a married couple, both age 65 or over, filing jointly with a modified adjusted gross income below $150,000, their maximum total deduction would be $31,500 for the standard, $3,200 for the existing age-based deduction, and $12,000 for the new senior bonus deduction. So their total standard deduction would be $46,700 for somebody over 65.
Yeah.
Well, for a couple both over 65.
Right.
And tack another $3,200 onto that $46,700 if both of them are blind or legally blind.
Which, at this office, we actually do get some. We got one blind and a few deaf, which the deaf doesn't help, but since Envision's just right down the street.
I think we have one there.
He makes an appointment and he walks over from Envision.
Yeah. Yeah, because Vision hires the
Right.
challenge, like Catch.
Yep. So when I recognize his name when it's on the appointment books and whoever's here, I say, yeah, I have,
It's usually me.
yeah.
I usually do it.
Yeah, because he used to be early in the morning. He changed it later in the afternoon.
He
Just
comes
make sure you have your word processor program open so you can type questions.
Saturdays
Yeah.
is when he comes now. So,
He'll answer all your questions. I mean, he's totally with it for the most part.
You mean you haven't gone the extra mile to learn American Sign Language?
I tried in high school and failed it, just like I failed
Everybody
Spanish.
knows American Sign.
And I can do the alphabet, but spelling out each individual word,
Yeah.
no.
That'll take forever.
Yeah.
All right, so this chart is totally invalid, except for married filing separately.
It was valid for last year, but
Well, yeah. For our coming year, it's invalid.
it's
Except for married filing separately. If you make more than $5, you've got to file a tax return.
yeah.
You might not have to pay any taxes, but you still actually have to file a tax return.
That's why we love the callers who call in and say, "Do I have to file taxes this year?"
I don't know.
I
Don't
can't
know.
mind read.
How much did you make?
So Bob and Mary Smith, both over 65, and are filing jointly. Neither is claimed as dependent on somebody else's return. Using the table above, check the appropriate boxes. For this last year, for 24, we figure out that they can make $32,300 before that they owe a penny in tax. You like our wireless charger?
Just curious. I've got one of the new Samsung things, and I don't know if it.
If it's due, put it on there. It'll work.
Well, it's 97%. I'm just curious.
No,
Because
it'll
it's
work.
magnetic.
Yeah, no, it'll work.
It'll stick to metal.
That's not magnetic, but it'll work if you get it lined up right. It should work. So the Smiths, and it should work through your case. I mean, that shouldn't have been enough. But so the Smiths here, we're just looking at their standard deduction when we're filling out our 1040 at this point. We have no other information for them. This is just the example. I'm not sure it's plugged in right now, to tell you the truth.
Oh, okay. Well, that might
If you complain it can be claimed as a dependent on somebody else's tax return. Your standard deduction is limited to the greater of $1,300, or your earned income for the year plus $450, but not to be more than the standard deduction plus that amount. So last year, not more than $14,600. So yeah, I mean, you can make a good deal of money as a teenage bagger at Dillon's and still not owe any tax, even though mom and dad are going to claim you on their tax return.
My grandson works at McDonald's and makes $190.
Yeah, he works year round. I mean, there's a difference.
No, per hour.
Oh, wow. So like we said, IRS has this publication and worksheet that covers all of your scenarios. This one is if you're being claimed as a dependent, how much money can you make before you have to file a tax return, and here's the worksheet for it. And of course, if you got a paycheck, you probably want to file anyway because you had withholdings. You probably don't owe any tax, so all those withholdings should come back to you. So you don't have to file, but you probably should. And at Liberty, we do this return for free, or at least our liberties. Dependent returns are free. Because I don't want them going home, downloading a 1040, claiming themselves, and screwing everything up. Because that happens way more than one would like.
What we're dealing with right now. Couple have been claiming their daughter who's been in college for the last 3 years. Daughter was working a little bit this year, decided she's going to go file her own taxes, and didn't let anybody know that she was being claimed as a dependent. So she rejected back, told mom and dad what was going on. She filed an amended return.
You're still waiting.
It still won't take it. Have to have IP pins for everybody on the return, mom, dad, and her. And they're not claiming her next year because she's moving to Aviano, Italy in about 2 months with her husband, who's being, well, she's getting married and then moving to Aviano when he gets transferred out there for a permanent duty station.
Mm-hmm.
So we're having to go through the steps of now having both parents come in, take her off, file the return electronically, come back next week, sign the amendment, and send the amendment in so that they don't end up owing for federal and their state is already covered and paid for.
Okay.
It's going to be. And I still can't get mom to come in and sign. Dad's been signed for 2 weeks. Mom just, and I've sent the package multiple times, but she just decided she's too busy to come in. So it may be next year before we get anything done. Have them do it when they come in next year.
Well, yeah, because there's a point where she's not going to be able to do it. She can come in and sign, and then nothing's going to happen because it's in the IRS retool period.
Yep. Yes. So please, if you have a client that has children that they're claiming and the kids are working, Tell them bring the kids and the kids' W-2s in with them when they come.
You don't have to bring the kids. Just bring the W-2s. I'll send out a signature package. They're more likely to be able to negotiate the signature package
Exactly.
than most of our
Well,
clients at
would you
this
go
point.
sit with your mother, please, and help her real quick?
Well,
And actually, when I'm doing their return, I actually have to point out to them, and you're required to also, is that it's their tax return. Do they want their parents sitting there? They can tell them to go sit over there.
well, usually that's what we do is we'll bring mom and dad, junior, or what's the junior for a girl?
Jeanette.
Jeanette?
I
Okay.
don't know. Juniorette. Female.
The child will come in, and the first thing we do is we look at the child's W-2. Do they need to file? If they didn't have anything withheld, federal, state, there's no point. We don't worry about it.
Or if it's below $10.
Yeah. If they had something withheld, then what we usually do is make a photocopy of the W-2, and then I send them over to one of the other preparers. They get to do that one, or
Yep.
they send them over to me, and I get to do
But
that one.
don't forget to mark them as dependent on another tax return.
Yes.
Yes.
Good golly, Miss Molly, that's one thing that is an easy little dip that you forget.
It's a radio button click, and
Yep.
that's it.
It's easy to skip. All right, so let's talk about the fun part of this chapter. Boy, did we take a long time getting here. That's okay. Itemized deductions. So most taxpayers have a choice of taking the standard deduction or itemizing the deductions. Itemized deductions are eligible to expense certain expenses on your tax return that you can claim to decrease your taxable income. They are expenses. You spent this money. The most common reason for itemizing is because you own your house and home mortgage interest and real estate taxes are deductible. And really, I mean, if you're going to be looking at itemizing, basically, yes, you're going to need this. Because it's going to be your biggest number for the most part. It's going to help you get there. But we've already seen, on our marrieds, their itemized deductions are going to have to be over $32,000. Who's got that?
And keep in mind, if they turn around and they say, well, most all of my deductions are medical. Well, what is their adjusted gross income? Because then you have to take 7.5% of that and add it to their standard deduction. So if they're a couple, if they're a couple over 65 and they're getting $46,700 for a standard deduction, and they have an additional 7.5% that they have to beat to claim their medical expenses, you could be looking at them needing to have $50,000 to $60,000 in medical expenses to claim anything.
Exactly. Or the way that I'll say it again here in a minute.
Right.
Often, other common itemized deductions are large unreimbursed medical expenses, state income tax, or state and local sales tax. You can choose one or the other, but not both. Charitable contributions. And our other actually biggest category is gambling expenses, up to the amount of your winnings.
No,
Well, that's
90%.
I know. I was going to get to that. But
Okay.
So if a person wins $1,200 at the casino, they still, on their taxes, will be required to pay some sort of tax.
That's guaranteed now.
Yeah, because they can only out of
Because
that.
Matt let the cat out of the bag. So you're only allowed now to write off 90%.
So if you win 1,000, you can only write off 900. You still pay taxes on $100.
Who's got a handful of
I don't even want to deal with Rose right now. We'll deal with that when she brings
that?
everything in.
Got in the thing with her saying, well, because he doesn't have to pay taxes. Yes, he does.
Well, I haven't ranted on this one yet, so I'm going to rant on this one right now. There's something out there called some guy
Yep.
or a friend of a friend, and I want to throttle these people.
Exactly.
There's some guy in the friend of a friend. Well, some guy told me that I don't have to pay taxes on my gambling winnings if I have gambling losses to match it, which A, was never true, and B, is not even complete, or is even less true now. Because they were thinking that, well, okay, if I could show that I won $10,000 and that I lost $10,000, then automatically that's zero sum. I don't have to do anything. No! That $10,000 goes on to Schedule A. And if you can't itemize, if that's your only deduction,
You're
you don't
screwed.
get it. You're paying tax on the 10 grand. But we'll go round and round with somebody at least once every other year because some guy told them that they don't have to pay taxes but got equal losses. No, that's not how it works.
You would have let me put my signs up that said some guy doesn't work here. We could have
Yeah.
eliminated all of that.
Somebody told me. Already I'm suspicious as soon as I hear it. Somebody told me. Because somebody told me generally doesn't have good information.
They saw it on a reel on TikTok.
Exactly.
And here's the problem. The statement is not inherently false. All the statements that you hear from some guy have a kernel of truth. They're not totally wrong. It's the circumstance. Yes, I can write off your gambling losses on Schedule A.
Like the one that I got sent to me was a reel. I think it was from TikTok. The guy says, you run a business, you can write off your dog as a security system for your
Oh,
business.
yeah.
Some of it you can't. Shots.
And I told them I put it because they were sitting there talking about, oh yeah, you can put all of this on. I just responded, good luck. I said it'll depend on the breed. Your Chihuahua is not going to fly,
No.
and you had better have
As a
expenses.
service
As a security.
dog? Oh, yeah.
So say Shane had a cockapoo, and he wanted to say that he could expense all of his food, his vet bills, and everything else for his cockapoo because he brings his cockapoo here to work, and the cockapoo is part of his security system for the office. Good luck. That's not going to fly with the IRS.
Well, I'm not going to try it either because I'm not that
But
stupid.
it would,
Right, but I'm just saying.
But as a medical, are they
No, wait!
No, you're getting on a whole different
No.
Hey, it's an animal. I'm just kidding.
Stop! Everybody's trying to let all the good stuff out of the bag. You know, and I'm going to be just left with all the boring crap. All right, and here's the one thing about itemized deductions is that, hey, we know automatically if you're married filing separately and the other spouse itemized, you don't get a standard deduction. You have to itemize automatically. Here's another place where people will itemize, even though it might not be advantageous for them. There are certain religious sects out there that aren't allowed to take the standard deduction. They look at it as a government handout, and they're not allowed to take it, according to the church. Not a problem. There's a little box on there, and whatever they can itemize, that's what they're going to get. And if it doesn't meet the standard deduction, if I have that box clicked, it'll take the itemized.
The nice thing about the IRS world is if you can do it one of two ways, you're allowed to force the software to do it the way you want it to be done,
In this case.
in this case.
Like I said, I haven't had it for a while, but I have had it.
Mennonite farmers.
Yeah, it was a Mennonite. They're not allowed to take the standard deduction. They have to itemize, and if they can't beat it, well, that's just too bad. Pay Caesar what is owed Caesar, and that's what they're doing. All right, so here's what Schedule A looks like. It's a simple one because it is just the front of the page at the moment. Itemized deductions include amounts paid during the year for qualified medical and dental expenses, certain state and local taxes, certain interest expenses, including mortgage interest, gifts to charity, casualty losses that were in a federally declared disaster area, so meaning the tornado came and took out my house, I can write it off whatever the insurance company didn't reimburse me.
If the president says.
If it was a federally declared disaster area.
Do they send out
Currently,
letters?
good luck on that. What?
Do they send out letters to the homeowners?
No,
And
but
so you don't have any paperwork?
no, but the IRS does kind of have an idea of what was what based on addresses and zip codes. So it's not a huge problem, and I mean, here we are in Kansas. If a tornado went through a neighborhood and you know where that neighborhood was, and somebody comes in for that neighborhood, that address, you know,
Yeah.
So far, it's just been handled.
Yeah. which isn't going to be enough to be declared a disaster area.
No.
It's been a while since a tornado hit town.
Yeah, right. Too close to the river.
Yeah, wives' tale.
That is a wives' tale.
Indian.
Huh?
Indian.
The last time that there was a federally declared disaster area for Wichita in a tornado, it crossed the river.
Happier than a twister in a trailer park.
Which it was.
Was. I lived in it. That's
There's some other itemized deductions that show up on line 16 of Schedule A, which is the biggest one. Like we said, it's going to be those gambling losses up to the extent of 90% of your winnings now. Don't worry about it. Just plug in all your losses.
Yes.
The computer.
And that comes on a form they can get at the casino?
Yes and no.
The IRS is not the greatest fan of the casino letter because I can give my card to just anybody and they can swipe it. And so the IRS doesn't. They might take it as some backup, but that better not be your primary. When you're talking about gambling, the IRS wants a log. You have a log book that you update as it happens. So it better not be a pristine log book, all in the same colored pen, and just looks like it's off the shelf. It better be dog-eared, spilled on, smell like booze, 5 different colors of ink, 2 pencils, maybe even a crayon, writing it down day by day as you do these things. That's what they want. That's your primary proof now. You can back it up with the letter. But your primary proof is the log.
Nobody's gonna do
Oh, my Asian couple used to bring in 30 or 40, 80, 60 W-2Gs. And then they'd bring me in their entire year's worth of credit card statements. One credit card statement. But I could show on the credit card statements where they made a $1,000 withdrawal at the casino ATM, at the casino window, because it specifically stated 777 Stillwater, 777 Park City. It specifically stated, and then I could turn around and I could show W-2Gs for either those same dates or dates preceding or after that.
Yeah.
So I could prove that they were spending this money at the casino and it was directly related to the winnings they had on their W-2G.
Yeah, up until a couple of years ago, that was my advice, is that if you're going to gamble, go to the ATM at the casino and take out the money that you're going to gamble
Yeah.
at the ATM at the casino. But then the IRS has come back and kind of said, well, we really don't like that either because there's no proof that I didn't take the money out and then go get the steak dinner.
That's what I was wondering.
So
Yeah.
they're not keen on that either. Then we're back to the law.
Right.
How much I gambled, what I was doing, how much I won, how much I lost.
They didn't come in last year because I told them they owed $50,000 and they just got that answer.
Yeah.
Since you're a cash basis taxpayer, which is 99.9% of the public, you can only deduct what you actually pay, not what you owe. So if you haven't paid that medical bill you don't get to write it off. You gotta pay it. And if you paid it on your Discover card, that's considered paid.
Yes. So don't just accept a bill from the hospital.
Yeah, we need the matching payment to go with it. And it could be a partial payment. It doesn't have to be a full payment. I don't care.
Just so
Show
long
me
as,
that you sent them some money.
yeah.
When itemized, you should include every deduction allowed by law. If the total of your itemized deduction is claimed in place of your standard deduction.
Yeah,
You
yeah.
get to choose between what's good for you. What's best? What's the best result? Which is true in a lot of IRS things. There are two different ways of doing something. You get to choose the best way for you. So let's talk about medical and dental expenses because that's the first section of Schedule A, and Matt's already let the cat out of the bag on some of this. You can only deduct the amount of unreimbursed medical and dental expenses that exceeds the applicable percentage of your adjusted gross income, which currently stands at 7.5% of your adjusted gross income. Keeping it simple, if I only have an adjusted gross income of $10,000, I can't write anything off until I get past $751. Then I can deduct the first dollar.
No.
Now, granted, these numbers are not realistic for this, but it helps you put your head around the math and what the idea is.
$10,000 in income, $1,000 of medical bills, you get $250.
Yep. And that's assuming that you paid it.
Yeah.
You don't get to write off what the insurance company paid because you didn't pay that.
Mm-mm.
You get to write off your out-of-pocket expenses only. Deductible medical and dental expenses includes the diagnosis, cure, treatment, and prevention of disease, including insurance premiums for medical and dental care, including qualified long-term insurance. This includes Medicare's Part D, B, and D. Spoiler alert, when you're using Fusion and you're filling out the SSA 1099 and Medicare B and D are on there, it automatically carries it back.
Mm-hmm.
Thank you, computer program.
And if you have both, if you have numbers for both Part B and Part D, because there's only one spot to put it, please add those numbers together and put them as a total
Yes.
in the spot for Medicare.
Right.
And I hate this form for you, especially. I'm talking to you up front. If you don't read it correctly, you will put in the wrong numbers. It says, enter the number on box 5. And then it says, description of box 5 for Medicare. So if you don't read the form, you're not going to find the numbers. And you're going to put in the wrong numbers.
Yeah.
It gets a little confusing. So don't ever feel like you can't ask.
Yes. The stupid question is the one that wasn't
I don't
asked.
think we have any stupid questions.
No.
No, the stupid question was the one that wasn't asked.
Yeah,
Yeah.
that's true. Yeah.
Yeah. When it comes to doing taxes, if you're not sure about something, ask.
Don't guess.
We're
If-
not gonna reprimand you for it.
No. If I'm not sure about something, I
We
will call Shane.
Yeah, I call Shane or
Somebody.
look it up.
Get a second
or-
opinion.
You know, if
Google it, but get a second opinion.
if I have a client come in and ask me a question and I'm not sure about it, I'll tell my client, look, I'm not really 100% on this. Let me call my guru, and I
Yep.
call Shane.
I do too.
And I
you
just
guys
run
call me, but
Yeah, I just run it by whoever's here because I want a second opinion. I
Yeah.
think, and I'll structure it. You know, I think this. What do you think?
Yeah, we'll talk it through.
Yep.
Yeah,
Maybe the first
I've heard
year
you
I
guys do
really,
that. Yeah.
And we do that. That's just not for you. I mean, that's what we do.
with me being a first year last year, it was really nice because really everybody checks everybody's work.
Yeah, and we do double check it.
Yeah.
Yep.
Yeah.
Double
Well,
check
for the
their-
most part.
Well,
My-
If we get too busy sometimes.
my work, Shane's work, is not so stellar that we can't fat finger a number and make a mistake.
I like transposition, and I like putting the wrong box in the SSA 1099.
Yeah, that's my favorite trick with Shane. I always gotta double check because he'll put the number that has the Social Security already taken out, not the full amount. He looks at the wrong box. And that's why I said, make sure that you read on the screen what box you're supposed to be looking
So for Shane, somebody could have $17,000 of Medicare expenses.
at. No, what he does is like box 5 will be 25,000.
Right.
But after Social Security, it's 23, or after Medicare, it's 23,000.
And he'll put the
He'll
23.
put the 23,000.
Yeah.
Yeah. I'm bad at that. I know.
And you'll find out I pick on him when he does that. So
And then I get mad and pout for the next 5 minutes. But
he gets over it because I get him Starbucks every morning. So
hey, I pay for it. You just go
I
get it.
run and get it for us. That's still me getting it for you.
All right. Other things you can write off on Schedule A: prescription medicine, your co-pays.
Yes.
Easiest thing in the world on that one. Go down to Walgreens; they'll print it out for you. Go to Dillon's. Go wherever you have your prescriptions. They'll print it out for you.
Dillon's, you don't even have to go down. If you've got
If you've got
the
your app.
Dillon card and you've got the Dillon's app, you can go right into the
Yep.
prescription tab
Yep.
and print your own history right at home.
Medical care professionals. They're very loose on what that means. It used to be very strict. When I first started teaching this class, very strict. AMA only, basically.
Yeah, if you weren't CNA, CMA, LPN, RN, PA,
Yeah, LPA. Yeah, you weren't going to take it. Now it's so loose that chiropractors, which before was not, acupuncturists, which of course before wasn't.
mm-hmm.
So it's gotten a lot looser. I'm not so keen about going down to the witch doctor, but I'm close. Maybe your shaman.
If it's a religious thing, it's a religious thing.
Medical examinations, lab, radiology services, diagnostic tests. Were you stock in the hospital? Well, you can write it off, whatever you paid out of pocket. Stop smoking programs, although at one time the hypnosis one wasn't, but I believe it is now.
Mm.
Medical treatment for at a center for drug and alcohol addiction. So if you go to the Betty Ford Clinic, guess what? You can write it off.
That's why movie stars don't have to pay taxes.
Yeah, they wrote it all off. They wrote it all off. Only, like we said, but you have to spend in excess of 7.5% of your adjusted gross income to be able to deduct your first dollar of medical expenses. Now, granted, on the computer, I'm not making that distinction. I'm just plugging in all the numbers. I don't have to filter out. Let the computer adjust for the 7.5%.
And then for some of our clients, they want that in there regardless. They
Yeah.
bought it in,
Yep.
they want it in.
Yeah.
And for the most part, I will humor them. If they bring that in, I'll plug it in, and if it makes Schedule A, great. It doesn't force it. I got to check a box to force it.
Yeah.
So if it doesn't meet their standard deduction, it just spent maybe 20 minutes putting in some data.
And after it's all in, when you're going over it with your client, you tell your client this is your standard deduction, and they look at you and they go, "Well, but did you get in all of my medical expenses?" It's a little white lie. Yes, I put in all of your
Yep.
medical expenses.
I've done that.
But for the most part, I've put in all their medical expenses.
Yes, we put in all of your expenses. Yes, we got your car registration. Yes, we,
Property tax,
yeah.
does get all of that.
But remember, when we're talking about the 7.5%, in this case, it's only medical expenses. Don't
Yeah.
confuse it with other things that we're going to talk about on Schedule A.
Yeah, no.
This is just medical. You can include medical expenses you paid for yourself and for your spouse, obviously. Dependents claimed on your return. Well, that's logical. A person who was your dependent at the time you paid the expenses or at the time the medical service was provided. Any person you could have claimed as a dependent except that person made over the 4,700 or what, 5,200, I think it is.
50-50.
50-50.
Last year was 50-50. I don't know what the...
No, last year was 4,700.
No, last year was 50-50.
Okay, well, either way. Well, what's this guy? This is that qualifying relative. Except that he's not because he made too much money. But if I paid medical expenses for them, I actually still get to write it off on my return.
$5,200 for this year. No limit for qualifying children. $5,200 for a qualifying relative. Last year was 50-50.
All right, so medical, it's here. For divorced or separated parent, either parent can claim the child as a dependent. Each parent can include the medical expenses that they paid for the child. So even if I'm not claiming junior this year on my tax return, if I paid medical expenses, or if I'm the one buying their health insurance, I get to write it off on my return.
Paying for those braces.
Yeah.
Even if you went out and got a loan, so you paid the dentist off in full, and you're making monthly payments, those monthly payments count.
Does not matter which parent claims the child as a dependent. Like I said, if you paid it, you get to write it off. Filed separate returns, each of them can only include the medical expenses they paid. Even if you wanted to be generous and say, you know, hey, I wrote the check for this, but you write it off, well, the IRS would not be so keen on that if they found out that that's what you did. Any of the expenses that are paid out of a joint checking account in which they have the same share of ownership, the expenses could have been considered paid equally by both unless they can show otherwise, like a huge deposit right before I wrote the check for about that amount. If your spouse lives in a community property state, Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, or Wisconsin, and file separate returns, any medical expenses paid out of community funds are divided equally. So take that first paragraph and basically throw it out the window.
I love how Texas is a community property state with no state income tax.
Fun, isn't it? Deductible medical and dental expenses include the cost of diagnosis, cure, treatment, prevention of disease, including weight loss programs if the treatment is for a specific disease as diagnosed by a doctor. You can't just look at the mirror and declare yourself fat. Well, that's an interesting way to walk in. You can't just look at the mirror and say, I'm fat, and then start a weight loss program and write it off. No, you have to get the doctor to sign off on it. Medical aids. This is where a lot of things get overlooked. I could write off eyeglasses, contact lenses, hearing aids. Don't forget the batteries. Hearing aid is worthless with dead batteries. So I get to write off the expenses of the batteries. Crutches, wheelchairs,
Walkers.
walkers, even the little
Pads.
one little cart.
Oh yeah, the
little
knee
scooter.
scooters.
Yep,
The knee scooters, yep.
yep. Those are all medical expenses that I can write off.
Your hover round.
Yeah, yeah. I mean, those electric wheelchairs.
Yeah.
I can write it off. Once you paid for it.
Electric scooter.
Yeah, all that. Now, people always ask you, it's always the fun part of your day. Guy independence, well, I got a dog. Can I write him off? Well, actually, the answer is maybe.
Possibly.
Providing that it is a guide dog or a therapy dog. You better have the certification.
Yep.
Just not say that my iguana up here is my therapy iguana.
This is my emotional support animal.
Yeah, no.
Dude, my therapist told Kelly, don't get rid of any of her animals. Because she needs them. So, if I go in and get them all certified, all 6 of them,
Yeah.
Mhm.
yes.
Yeah.
Where do you get them certified
Well, I mean, where do you get an iguana certified? Your pet snake certified? That's, I mean, it's easy when you think about the dog.
Mm-hmm.
You know, you run them to the training program, you get the certification, you got their certificate. Obviously, you know, I mean, that's what you think of. And that's what they're talking about. You know, the more weird you make it, the less likely it is going to be to happen. Now,
Your emotional support animal is going to be the hardest one because basically all you're going to have to prove that that's an emotional support animal is a declaration from your therapist.
Or
that
doctor.
that yes, so and so relies on this animal for,
Medical
emotional
care or
continuity.
emotional,
and then it'll
And it-
depend on the adjuster that you get.
Yeah, but it also depends on the circumstance because they will be a lot more likely to offer the emotional support for a veteran with PTSD.
Yes, yes, yes. If you have a diagnosis of PTSD, that's gonna go a long way.
Yeah.
which I do. So,
Right.
So I can write off your animal. That includes not only going to the vet for the animal, that animal, if I get it fixed,
shots.
that animal, shots, that animal,
Annual
but that
sales.
also includes Alpo.
Chew toys.
Yeah, dog's worthless if I don't feed it. Well, long term anyway. It might not matter in the short term, but that doesn't last very long. So,
I will make you depreciate the doghouse.
also, I can write off lodging expenses, but not meals while away from home to seek medical treatment provided by a physician. Provided that there's no significant element of personal pleasure, recreation, or vacation for my travel. My lodging expenses are limited to $50 per night. So we're not staying at the Ritz-Carlton and writing it off.
Just one other quick thing.
Well, this is gonna be there's a
What'd she
caveat.
say?
You're not gonna stay anywhere for $50 that you want to stay anyway.
Right.
Right.
If you're out of town and it's that price, you might not be in a very good neighborhood.
Yeah, exactly. We'll come back to that. Matt's got something.
But I mean, you have to look at the kind of business they've got. Plus, you have to look at the breed of dog. Somebody coming in telling me that they've got a vape shop and their beagle is their security system. I'm not allowing that. I don't care what you bring in, because the IRS is going to look at that and go, yeah, no, forget that.
Would rip your arm off if you came near that fence.
An
Well,
Akita, I would,
Akitas are mean.
I would
Right.
allow an Akita.
He loved me because
Yeah.
I
But I would allow an Akita. An Akita is
But
it
yes,
is a
that-
guard animal.
That would be a
It-
good example.
What it's bred for.
They
Yes.
say bull mastiffs are the most
Yes.
friendliest dog. It's never will hurt a person. But
All right.
let me tell you, they can be
They're
mean.
protected.
Yes.
We are
Yeah.
way off of our discussion. That was more of a Schedule C thing anyway.
True.
Let's get back to lodging expenses. And I'm going to tell you a couple of stories, and some of it's going to be a preview of what we've got coming, but this is just an opportunity to talk about it now. So, two different examples: lodging expenses, but not meals, so on and so forth. So, my son, my youngest, as he was growing up, he stopped growing, literally. Had to take him to Kansas City to Children's Mercy so he can get growth hormone. Had to go a couple times a year just for updates, and then some regular ones here at the remote clinic, but at least twice a year we had to go to Kansas City. Yep. You know it. Yep. Good luck, you know. The insurance companies aren't so keen on accepting that. It took begging by our doctor. Anyway, so a couple of times a year we got to go to Kansas City. If I chose to go up the night before, because I always made an early morning appointment, and I did that because we would just leave early in the morning, get up there, do the appointment. Now we got the rest of the day in Kansas City to go do some fun things. But running it back the other way, if I decided that, well, hey, I don't want to go up first thing in the morning. I don't want to roll out of bed at 5. I want to go up the night before and stay at a hotel. And granted, I'm staying at the hotel, and then after the appointment, I'm basically going home. I could have lunch. I might be able to even stop at IKEA or something. But no significant amount of pleasure. I didn't go to Worlds of Fun. Oceans of Fun, whatever.
Legoland.
I didn't go there. Yeah, there's a Legoland. There's a SeaWorld aquarium up there now, too.
Yeah.
I didn't go to those places. I just 1 or 2 stops on my way out of town, either way, I can write off the cost of the lodging expenses. Now let's talk about this $50 like you were talking about. Now this is true if it was just me. If I'm going up there by myself, I'm limited to $50. I'm taking my son, minor child. Somebody's got to go up there and be his advocate. That's $50 per person. Now I've got $100 I can write off because my presence is required.
But what if Crystal went with you?
That doesn't count because it only takes one of us. But this also, let's extend this one a little bit, is that, okay, so now it's not my minor child, it's my wife. And we're going up to St. Luke's. Or I could run my mother-in-law in this case. Going up to St. Luke's because he was getting a heart transplant. My father-in-law was. What can I do? Well, I can write off the $50 per night, but for her to stay up there. But what happens after the transplant? They go up with every quarter for just a check on the pacemaker and the meds and make sure that he's out of rejection. Again, I'm back to $50 for both of them because at one time during his exam, he will be in a non-conscious state.
He will be incapacitated, and her presence is necessary.
Somebody has to be there to make any decisions if anything happens while he's unconscious. So again, her presence is necessary at these appointments. So I've again unlocked $50 per person per night. Now, granted, this doesn't mean I'm looking at $50. This doesn't mean I can't stay at some place a little bit nicer. I'm just capped at $50. I can stay wherever I want. I just can only write off $50.
And necessary doesn't only conform to the medical procedure. If Shane had to take his wife to Kansas City because she was having a procedure done, and the reason Shane has to take her up there for that procedure is because afterwards she is not able to drive home.
Exactly.
That is a necessity. Shane has to go because if
It's an
his wife,
outpatient. She doesn't get to stay, and she can't drive herself home.
right? If,
Somebody's got to be there to
She's
take her.
inpatient and we want to stay until she's released.
Well, my stepmom
Back
had
to
to
the
be
$50.
there.
yeah,
My stepmom had to be there for my dad's surgery
Yeah.
on Friday.
Yeah.
They came home on Saturday. They
Right.
still get to write off.
The $50 of them staying the night before.
Yep.
Or her staying the night before. There was a lot of times that my mother-in-law was staying at, or we would go up there and take our mother and take her and make her stay at a hotel. Because otherwise she's sleeping in the room, in
Yeah.
the hospital room. Which, granted, wasn't terrible. They actually had arrangements. It was somewhat comfortable. But she needed to get out and get an actual meal and do some laundry. So we would take her to a place that had a laundromat, or at least one that was close by.
laundry services.
Yeah, because here she is in Kansas City. She lives down here. She was up there for a good month, and we would go up every weekend and take her, get a hotel and take her out. So yes, those nights we would able to write off the $50.
Yep.
But let's go back to this. I can't write off any meals for any of us.
Right. Right. And for your question, if he took Crystal up the night before and they checked into a hotel, that's $100 for that first night. Now, the next day, when Crystal goes in for her procedure and she's admitted into the hospital for 4 days, and Shane stays at the hotel for 4 more days, that's $50 a night for those other 4 days.
Yeah. All right, ambulance services I can write off. If you use your car for transportation, you can deduct the mileage up to the allowable medical mileage rate.
21 cents.
Yeah, medical rate, 21 cents a mile round trip. But let's extrapolate on this. This isn't just talking about long travel. Now, granted, yes, when I took my son up to Kansas City, I got to write off our mileage to Kansas City and back. I got to write off what I paid the Kansas Turnpike Authority. But this is what we overlook, is that If I go to the doctor here in town, I can write it off.
Yep.
I go to Walmart to pick up my prescriptions, I can write it off. It might not be a huge distance, but if I'm going once a month, it might add up a little bit.
Oh, it adds up. It adds up. When my wife cut my finger off, and I was going back and forth between physical therapy and my house and whatnot, I was actually keeping track of all of my mileage, getting paid and reimbursed for that mileage. She thought it was funny.
Because your wife.
Yeah, it's a good thing your wife is also in the restroom right now. So
Oh,
she knew you weren't talking about her.
Yeah, well, she knows.
Yeah.
I tell the story all the time how she cut my finger off.
So, I mean, like I said, when we're talking about stuff on Schedule A, there's a lot of places where you can get creative and stay within the rules and really not even really push up against anything. All these things that I'm telling you about are actually things that you're not going to get a lot of blowback on from the IRS at an audit, as long as it's not outrageous. So car transportation, okay, so let's change this that I got an Uber. I get to write off. Taxi, I get to write that off.
Can they print receipts right on the spot for you? Uber?
No, but you would have, because Uber,
You'd have a screenshot of what you paid.
you have a screenshot of what you paid. Plus, with Uber, since it's all electronic, you're either making that payment on a credit or debit card, and you would have that statement to prove the purchase.
I've just never ridden that way out.
I've not either, but I'm just pointing it out to you. You would have a receipt of some sort somewhere.
Yeah. You would have the app,
I
so
can
you'd
see
be able
electronic.
to download that information off of the app. You could use your debit or credit card statement to show the payment, because it'll show up as Uber or Lyft on your statement. So
And ambulance just is not referring to the meat wagon you see on the street. It's also that one that flies by too. You need an air ambulance. Expenses that are just beneficial to health, such as vitamins and vacations, are not deductible. Damn it! I wanted to go to Cancun. I needed a mental break.
But my doctor said sitting on the beach at Christmas in St. Croix was what I needed to recharge.
Yeah, no.
Costa Maya.
You cannot write off non-prescription medicine, diet foods. You can't or you can't write off Jenny Craig.
What about your baby aspirin?
No. It's an
Doctor said so.
It's over the counter, and unless you have a prescription from the doctor stating that you have to have 81 milligram aspirin
I do.
for a daily regimen,
Yeah, I do.
then
Yeah.
you
Exactly. When you have that piece of paper from the doctor, I would say the same thing on the non-prescription medicine, so the baby aspirin. When you have the doctor's note, it became a prescription.
Right.
Because my vitamin D does too.
When the doctor says you need to take melatonin, you have the prescription. When the doctor says you need to take vitamin C or vitamins, you have the prescription.
Getting to write a prescription, you know
But
you're
we
not going
need
to
to
fill
get-
it.
yeah,
through the
exactly.
Oh,
pharmacy.
I do.
Yeah.
Because the only way
But
you
get
can
that
vitamin
prescription.
D,
Just
the
that,
strength have
yeah.
to get it through the doctor as a prescription too.
But I don't have to go that way. It's just as long as I have the doctor's note.
Yeah.
I mean, I overlooked this because my doctor told me that I
Oh,
need to
sure,
take
that's
vitamins. But I didn't think at the time, because I forgot how much vitamins actually were. I just bought some. Goddamn.
Exactly.
Oh, yeah.
Yeah.
That's why I always look for that. Buy one, get one.
Well, we've got a client at Rock Road that when she comes in, she will bring me in a stack of receipts from Whole Foods
Yeah.
for her her organic, chemically free cheese and this and that and vitamins that cost 9 times what they do at Walmart and everything else. And when she doesn't see them on her return and asks why, I'm like, because these are all over the counter. You don't have a prescription for them, and they're a personal expense.
Yeah, so I'm going to go back to this diet food real quick. It's like, okay, you have celiac disease. You got to go gluten-free. Sorry. Just because of the fact that you have to buy the more expensive bread, I just can't write that off.
Nope.
So let's go on. Cosmetic surgery unless medically necessary. You can't go
No tummy tucks.
unless the doctor told you to get one.
Yes.
So my grandson has a severe allergy to eggs. Eggs is everything.
Yeah.
Like it's severe EpiPen.
It's just too
here.
bad.
Right.
Wow.
Yeah.
It's just too bad.
Now his EpiPen,
Yeah. Write that off.
you can write that off. But if you have to buy a specific brand of bake mix so that you can make him his pancakes or his waffles, you don't get to write that off.
No.
Dang.
Even though it's twice as much.
Yeah.
No, sorry.
Yeah.
Now,
This food's expensive.
when I had a medical procedure of having a breast reduction, yes, I could have
Again, I
Medically
can get the
necessary.
doctor to write that
I
off.
could have gotten it paid for if my insurance company would have covered it.
Yeah.
They covered it
Yeah.
Right.
because he argued that, hey, this is because of her back.
Yep.
Right. But
Like-
that is a
Right.
medically
that's-
necessary.
Right, exactly. That's what I'm saying, though.
Yeah.
So some
Yeah.
cosmetic surgeries, you can get
Oh no,
a write-off.
I'm not arguing it.
Right.
I'm just saying is that you can't decide to go get Botox in your
No,
forehead
no,
because you didn't want crow's feet. You can't write that off.
right.
Need a little Botox to plump your lips up.
Yeah, you're not going to write that off. You get the silicone lip implants. You can't write that off. Now, if you had a mastectomy and decided to go get some augmentation surgery, that's covered.
That's
Some
covered.
of those insurances are covered that.
Yeah, and some insurance will cover that. So remember, we're only talking about out-of-pocket expenses. The insurance covered it. That's great. You're just left with your copay.
Your deductible, yeah.
Yeah, and
Yeah.
that's what you get to write off. Let's see here. Life insurance premiums, can't write that off. Medicare taxes withheld on your W-2, we wish. Funeral costs, can't write that off.
I had somebody ask about that last year.
Even
Cost
if
me
you prepay them.
Cost me $23,000 to bury my mom. I can't write that off. No.
Why? I don't understand why you, I mean, I just don't
I know, I mean, to me, that's actually medically necessary. Nobody wants a dead corpse laying around.
understand.
That's bad news. You have to bury them. You have to do something with them. Otherwise, it's medically bad.
Well, you can't transport them either.
No.
You have to have special licenses.
No, you can't. But you still have to use
Yeah,
that
after you had 'em-
information
after you had 'em
across state
cremated.
line if you're in a casket.
But still,
If
they
you're-
want to open it and
Yeah.
review it and yada yada. They give me grammar.
Make sure there's no
When they
fentanyl
got 'em
buried
over
in
in
there.
Australia.
I'm not smuggling drugs along with the
Yeah.
dead guy. Yeah. All right, so that last slide kind of implied that we were done, but I know better because we have more things to talk about in this section. Transportation, as noted above, transportation incurred primarily and essential for medical care are deductible. You can deduct the cost of travel to your doctor or medical clinic for treatment. You may claim the standard mileage rate for your vehicle for medical reasons or the actual out-of-pocket expenses such as gas and oil, which has always been the option. You can take the standard mileage rate, you take your actual, but you're going to prove it. And I'm not going to give you oil unless you're using oil at an obscene rate and your car is throwing blue smoke everywhere you go, then I might consider it.
Well,
But
I mean,
otherwise, I'm throwing gas.
if you're making monthly trips from here to Kansas City for doctor's appointments and you're getting an oil change every 3 months, I will figure out what percentage you're using that vehicle for
Right.
going to and from Kansas City versus what you're doing around here.
Yeah.
And I will give you that percentage of your oil change.
Yes. I'm not automatically throwing it all out, but chances are the mileage rate's going to be better.
Oh, most definitely. Even at 21 cents.
Costs and tolls and parking fees can be deducted whether you use standard mileage rate or actual expenses. You cannot deduct depreciation, insurance, general repair, and maintenance expenses. You have a blowout on your way, well, that's just you're too bad. And let's go back to this whole idea in general. I just can't decide that. Well, let's see here. I live in Wichita and I can get most of the medical services that I want, but I don't want to stay in Wichita. I want to go to someplace nice. So I'm going to find a guy in Dallas so I can have an excuse to go to Dallas every once in a while.
No.
No. Unless you were referred to the guy in Dallas No. If that medical treatment is available locally, unless you were specifically referred someplace else, they're not going to allow this.
Isn't that what happened with Sergio? He got
Sergio
this-
was referred.
That's what I'm saying.
Yeah.
He was referred down to Dallas.
Yes.
Yeah.
And that was part of the reason
Yeah,
why.
where me, I couldn't find a doctor that would give me a good answer here, so I went to Tulsa.
Yeah.
But I couldn't write it off.
No, because
That
you
was
chose
my choice.
your choice.
Right.
Now, my trips to Kansas City for my son,
That's different.
I didn't have a choice.
Right.
At the time, there was no clinic here in Wichita that offered it.
And had Shannon's doctor said, all right, look, I'm going to refer you to this guy in Tulsa, go see him, that would have been a completely different story.
Right.
Even though she wasn't happy with what her doctor here was telling her, if her doctor would have said, look, I know this guy in Tulsa, let me refer you down here to him.
Yeah.
That would have changed everything.
Mm-hmm.
And she left at just the wrong time. We had a good story coming up. Well, I'll tell you what, we're at the halfway point of the class, so let's just take a quick break.
I can't get a straight answer out of my Japanese dude if he's coming or not.
When they were almost there, we ran them like our faces. Because my mom had to say so. You took
So,
his allergy was so bad that if I would have ate something, he gave him this, he could have had a bird up. And have to have it up. Well, there's a party up there also, another party, for a little kid, they had cake. And of course, what's in cake? Yep. And these kids from this other party had playground. With cake all over them and playing. So guess what? Nope. Threw a temper tantrum the whole time because you wanted to be at the park to play, but you couldn't. It's so heartbreaking for him. I was so sad.
one of my foster kids was allergic to gluten. So when we, like, you
That
go,
is like the worst
it is,
allergy
to go to McDonald's, his hamburger was the bun and 2 slices of lettuce. 2 pieces of lettuce, and that was the bun, that was his bun.
See, Porter can't even have nothing, like, because there's a
Well, my
very
son-in-law
cheap
now,
place.
he has, I'm not even sure what he has, but he carries an EpiPen now.
Yeah.
He got bit by something out hurting, and now he can't eat anything with, what is his name?
Wow.
And he grew up in the woods. I mean,
That'd
he
be
would
so
go out and he'd
horrible.
eat a squirrel if he had to, you know what I mean?
Right?
His family was so poor back when he was growing up, but it's just, it's no deer meat. You can't be deer meat anymore. I mean, that's what they live off of a certain time of the year.
Yeah, my mom's
My
got
son's
celiac.
in the process of making a little, like, chart, but it's through websites, you know, where for kids with severe allergies, things that they can eat. Because there's nothing out there.
Yeah, it's weird now because it's like just out of the blue, he can walk through, somebody can just breathe out and he can
Man.
breathe in and it sets him off.
That just feels so bad. That could be the worst allergy to have.
Oh, yeah.
Gluten, you know,
That-
gluten, eggs, oh
He,
my God.
he,
It's worse than dairy.
oh, because I have another one to pick up today.
You can just swing by the office and drop them off.
That would bring spots on newspaper.
No, because I think we're planning on maybe running to the office today. If I can get this done, then I can get it sent off over today, but still get everything put up.
Yeah.
And then we talk about messing around with the computer a little bit.
Well, I mean, the only thing that I'm waiting on is Sherry to come in and sign so I can get the NASHs filed. Other than that, I'm gonna fire up your new computer and get it set and ready to go. So the only thing that you'll have to do is come in,
Sign
click and log in your Microsoft system or whatever. So you've got your dashboard up there, and then once your dashboard's up, I'll go in and I'll plug in all of your drop downs. And then I gotta back up Suzanne's and then pull everything out of Suzanne's and open up
Mine's a
hers.
hard drive from Broadway. It's not anymore?
No, I took that out last year. Before tax season last year, I took the Broadway processor out of circulation. I took the Broadway out of circulation because last year when we were having the problems with the machines because they were so old, Brett sent me 3 machines that were Windows 11. Well, all 3 of those machines required the HDMI display ports because they had graphics cards in there, and that's the only thing that would work on them. We didn't have any monitors to do it, so I didn't worry about it. My monitor was set up for the HDMI, so I set mine up for Windows 11 last year. And when I did that, I had my old Windows 10 machine, and I took the Broadway processor out and gave you my old Windows 10 machine.
I'm not even sure what's on my computer at home. My laptop.
So once I get the new Windows 11 machine in there, you won't have all of the Mandalorian screensaver stuff.
Oh,
on.
dang, I don't mind them. I'm a nerd too.
Well, if you want them on there, I can show you how to put them on.
Oh, I bet that's not one. It's just some of the stuff that's on the desktop is the one that, I mean, like stuff from other people's stuff that would be on the desktop anymore.
No, and one of the other things that I liked about Windows 11, or that I like about Windows 11, is my phone is synced to the computer. So if I'm having a problem with a client, and they can't get something up or whatnot, and I have to take a screenshot of something with my phone, I can take that screenshot with my phone, go in, hit my link, pull it up, and print it right off from my phone without having to download it or anything else.
I'm not linked to my printer at home yet.
As long
I
as
just haven't done it.
right, but as long as my phone is linked to the computer, then I can access my phone from the computer and all of the pictures and everything else. So it makes it a whole lot easier than trying to.
It asked me when I got my new printer if I wanted to do that, and it's like, not yet. Later.
That and HP Smart is going to be different on your 2 computers, so scanning is going to
Oh, yeah.
scanning is going to look different for you two for next
Yeah,
year.
because our print typing
Printing won't be any different. It should print just the same way.
our scan.
But you'll be able to switch when you open up HP Smart. Across the top, it'll tell you you have 1 or 2 computers set up, and it'll allow you to switch between either the one in front or the one in the back where Amy's going
You still haven't had a word from Veronica
to be.
yet?
Nothing from Veronica. I might try giving her a call again today, see how everything's going. Right now, I'm just figuring it's you, me, Amy, and Michelle. That's what I'm figuring for this year. For this coming season.
Is that enough?
More than I had last year. It was just me, Amy, and Suzanne last year.
Well, I was going to say, Sandy is not here. Have that conversation right there.
She's experienced.
Right.
I mean, she hasn't worked for a few years, but she's experienced.
Okay, so when you push in and let go, does it hurt?
She's like, what are
On
you
your
talking
side?
about?
And I do believe that she said that she was going to come to both
I didn't,
evening
but
classes.
I know the symptoms of it.
But yeah.
If you push in and let go, it will hurt. Does it hurt when you do that? Because that is
That's
a
up to you
sign.
whether you want. Yeah. I just.
At this point,
Which side?
It's a sign.
You haven't seen the show.
She might
yeah,
have it.
I've heard from Michelle.
I've never had it.
Michelle
I've
wants
been like,
to.
Michelle,
all my health problems that I've never had appendicitis.
no. Michelle wants
Could be a
25
gallbladder.
hours a
Could
week.
be gallbladder,
Yeah. So I'll leave that up to you. But like I said,
Not necessarily, depends on what.
That's
you
what's-
have.
Do we know what her availability is going to be?
not at this time. But if you want to start talking to her about it,
It's a adverse effect to the man.
Oh, really?
Mhm.
Okay, so it could be
Go back to the doctor
Could
and
be
you're gonna have
something
to
she
fight
ate,
yourself
too.
if she's not allergic.
Because I told them last night, I told her to lay off the meds because she's been her son.
But she can't go cold turkey off a lot of meds that'll reset her system and they'll make it work.
Yep.
Oh.
Yep.
But she can skip a day, right?
Yeah, but she could be in severe pain within the next 48 hours.
Yeah. Am I right?
well, thankfully the lights are off.
Yeah.
Exactly.
No flashing lights or anything.
Because the.
One of the big overheads. I mean, fluorescents are the biggest. Fluorescents are one of the biggest problems.
Yeah.
Then having blue eyes doesn't help either.
Arrow green. My wife is.
Yeah, because we don't filter the colors.
Fortunately, most of what's on right now are actually LEDs.
Yeah.
Depends on the time of the year.
Because as the
Make it gold.
Hazel.
as
or
the
around
starters
March,
burn
they turn
out,
gray.
I just have them replaced with LEDs. It's cheaper.
Yeah.
And that's what I do.
Yeah.
Instead of getting a new ballast, it's cheaper
Just to get new LED lights?
just to have them converted to LEDs.
Yeah.
All right. So who's outside?
Karen.
Karen, yeah.
Yeah, nobody.
Yeah, no, nobody that needs this information.
And nobody needs this information. So I want to come back to this because on the next slide, other transportation expenses that can be deducted are bus, taxi, train, plane, ambulance, all of that stuff. I had a client who had to go to the Mayo Clinic in Rochester, Minnesota. She lived here. What can I write off?
Airplane.
Well, that's easy. I haven't got there yet. I haven't got to the airport. She can write off the taxi or the cost of taking the car to the airport. If she leaves it in long-term parking, I can take that off.
Rental car.
I can deduct the cost of airfare between here and MSP, Minneapolis-St. Paul. That's the closest commercial airport to Rochester, Minnesota. Well, she's in Rochester. She's in Minneapolis. I got to get her to Rochester, so she can rent a car. I can write off the cost of the rental car and the mileage that she drives down and back to Rochester, which is about 90 minutes. Easy drive, 4-lane highway, but just hope that it's not like January, February.
Anxiety's nothing.
Last time I was in Minnesota, and it was December, and they were on my way home, they were in the process of having a ground blizzard.
I've been to Minnesota once. And really,
Ground blizzards are fun. Blue sky. Can't hardly see a damn thing.
Mm-hmm.
The wind's blowing so hard it's blowing all the snow around. Yeah. See? Me too. All right, so all of those expenses, airfare to and from Minneapolis, rental car, and the mileage to and from the airport to Rochester, and to and from the airport to her house, plus any long-term parking, I can write all of that off. Because she was required by her doctor to see a specialist at the Mayo Clinic in Rochester. So I can write all of it off. Transportation expenses of a parent to accompany a child that requires medical care deductible, as well as the transportation expenses of a companion with traveling with a patient unable to make the trip alone. Like we talked about before. And like Matt brought up too, if my wife was going up for a procedure that would leave her incapacitated at any time, my presence is required, and therefore anything that I rack up can also be deductible.
Like, if you stop at this one, Cassidy.
Can't write off the meals. Because the unfortunate thing is the IRS view on that, and it's kind of true. You were going to eat anyway. Whether you were at home, on the road, you were having lunch.
The fact that you could have had sandwiches at home and had to spend $30 at a restaurant is irrelevant to the IRS.
I got a broken arm.
Yeah, you might as well have just packed up the igloo.
Yeah.
Now, what you can deduct food-wise is food. You were in the hospital. You had to stay in the hospital. I can write off that meal. Because who wants to pay for that shit anyway?
Right.
I don't know,
If
depends on
you
what
bought
hospital
if you
you're
bought a
at.
meal from the cafeteria at the hospital
Yeah.
while you were
It's gotten
staying
better.
staying there with your daughter, then that would be a different story.
Yeah. So I was able to write off some of the meals that she ate from the St. Louis cafeteria, and she only took one meal a day there anyway. Otherwise, I was bringing her up some Chef Boyardee, and she was just using the communal microwave down at the coffee station. Yeah. I don't think she's eaten beefaroni since, and that was 2013.
I wouldn't. As I am 56, I don't think I've eaten beefaroni since I was 12.
Yeah, well,
I'm
unfortunately,
59
those
and I've
those
never
little
had it.
those are convenient.
Oh yeah.
They're no expiration.
How about
I took a van and parked it in the parking lot up there, just loaded it up with the food. She would go out there once a day and grab a few things and come back in. And we'd restock it every weekend.
No.
Transportation expenses that are merely for the general improvement of one's health and travel purely for personal reasons to another city for an operation are not medical care and are not deductible. Like I said, it's okay for my client to go to Rochester, Minnesota, but that's because she was told to go there. If she decided that all the clowns in here in Wichita, they were able to provide medical care, she just thought they were all useless and wanted to go see the best of the best and went to Rochester, that's not good enough. She doesn't get to write off any of those. And again, she can't have a lot of fun while she's doing it. My primary reason was to go to Rochester to get medical care. Now, on the way back, she can, Minneapolis, St. Paul Airport, Mall of America, they're just right there. You can see one from the other. So if she went to the mall real quick just to pick up a few things, it's not a problem. If she spent all day there, it becomes a problem.
On her way back from the Mayo Clinic, she decides to stay 2 or 3 extra days because the state fair is up and running.
Oh, and the Minnesota State Fair is a spectacle.
Right. So she spends 2 or 3 extra days so she can go to the Minnesota State Fair. That 2 or 3 days is on her dime. She doesn't get to claim any of that.
And it starts to actually make the entire trip questionable.
Right.
But if she's bringing a plane back, does it cover that then?
I would be willing, at that point, since she spent 2 days there, I'm willing to give her up, but not back.
Yep.
That's what I thought.
Yep. Whatever expenses she incurred while in Minnesota, she eats.
Yep.
But getting from her house to the hotel, or from her house to the airport, landing in Minneapolis, she can have all of that.
Once she starts having fun, then
Yeah, so, well, no, I'm not saying she can't have any fun. She could go eat
Well,
at
you
Red
know what
Lobster.
I mean. 2 to 3 days after, then you
Yeah.
gotta draw the line.
Well, even on the same day, if she just stopped off for an hour or two at one
Right.
place, that's not a problem. That's not significant.
Right.
It's when you start spending a chunk of the day.
What if she has to wait for a result or a different test?
So she's in Rochester.
Yeah,
It's not as fun.
right. If she's sitting in Rochester waiting a day for results to come back before she's cleared to leave,
That's
all
not
of
a
that's
problem.
covered.
But how are you gonna know?
There ain't nothing to do in Rochester.
I trust my client. There's got to be a degree of trust.
Yeah.
And it's
Find
got to
out
sound
if you
reasonable.
know the
No, you
client.
bring up a very valid point. I just can't
What's she
necessarily.
saying?
She said, well, how do you kind of prove the fact that she had to stay
Right.
for that test to clear? And there's got to be a certain degree of trust because,
But if they don't tell you they had fun there.
Well,
Well, I'll give you an example.
Most of the clients I noticed from last year are regulars. They come I mean, how else can you say it? And you get to know them. You hear
Well,
hear
but
how he
besides
talks to
that, I
people,
mean,
you know,
My
you
car,
really get to know them.
my car dealer flies from here to Texas, from here to Denver to go to the auto auctions because that's what he does. He buys cars at the auctions. Okay, so when I see on his credit card statement that he's got airline tickets on Southwest or United, and then he's got a hotel bill, I give him those without question because I know exactly what he's doing, where he's going. At the same time, he's also, for that same period, typically has a bill like, Scotch and sirloin for $275. Now, it is completely possible that he comes back and tells me, look, I took, the floor manager and the auction manager out for dinner. It's a business dinner. He never does. Because the first time I saw it on there, I asked him about it. He's like, I went to dinner, had a few beers, had some drinks, nice meal. I'm like, okay, you understand, you're not going to be able to claim this. We're going to leave your meals off. You can have your airfare. You can have your hotel stay. And he's like, oh, yeah, cool, no problem.
But if he could change the venue, would you give it any?
No, because
No.
the deductibility on meals across the board is non-existent anymore. But let's
Even
get
as
back.
an advertisement?
Let's get back to her general question. The other one is
Yeah.
that consistency goes along with the IRS.
Yep.
So if I look at last year's return and see that it matches basically in the neighborhood of what I've got on this year's return, I really don't have a lot of questions, even if they're new to me and I'm looking at just whatever was on paper. So, I mean, and we talked to the clients. I mean, I wouldn't have known half of this story without actually just visiting with my client. I'll get to another point here about visiting with the client here in a second about some other things, but we just don't sit down, head down, and start going at it.
Wow, you go to Rochester 3 times a year. You got family?
Yeah, what's
I mean,
going
he's
on?
from Minnesota,
Yeah.
right?
Yeah, what's going on?
Legitimate question.
All right, the cost of lodging at a hospital or similar institution is deductible if the main reason for being there is to receive medical care. Well, who's staying in a hospital that's not getting medical care? Well, it was better than any hotel I could find.
What if it's mental?
That's still medical
In the
care.
airport,
You can deduct the cost of lodging not provided by a medical facility if you meet all of the following requirements. The lodging is primary and essential to the care. You're getting medical care provided by a doctor in a licensed medical facility.
See, remember that. When I have my nervous breakdown and you have to commit me, it's all deductible.
The lodging is not
It's funny for
extravagant.
her.
I take it all the shame.
There's no significant element of personal pleasure, recreation, or vacation in the travel away from home. And I'm not saying you can't have a little fun. The amount including your medical expenses for lodging cannot be more than $50 per night for each person. The cost of lodging for the person and accompanying the patient is deductible, which is everything that we've already basically said. The cost to you, your spouse, or your dependent if you live in a retirement or nursing home is deductible if the reason for primarily being there is the need for medical care. So mom's in the nursing home because she needs the care. Dad lives there just because he wants to be close to mom. I can't deduct that, even though he's paying all the same bills. He doesn't have to be there. I can't deduct it. I can only deduct the stuff for mom. Home improvements that do not increase the value of the home but are required due to a medical deduction are deductible. If the improvements increase the value of the home, only the amount over the increase of the value is deductible. This goes back to the other thing that I was going to talk about when we were talking about interviewing the clients. When I first got into the business, I would actually go to the client's house. And the first place I worked for was my wife's ex-father-in-law had a tax business, and he brought me on board. He gave me all the Wichita clients, and he lived up in Marion. And you can have all the Wichita ones. I don't want to come down here all the time. Fine. I went to one of the clients, and it was a newish house. It was sitting at the kitchen table there doing his return, and I looked and was like, "We've got hardwood floors all over the place. You know, I like this look. Damn carpets. Nobody likes carpets. Or at least I don't like carpets." Says, "Yeah, the doctor told me that I got to get rid of the carpets because I have severe asthma and it just makes it worse. I had to put in wood floors."
Really?
Oh, really?
Yeah.
You need a doctor to sign off on that? Saying that this is what you need? Oh, yeah, I can get that letter. I deducted this floor.
And the cost of ripping out the carpet.
And the cost of disposing the carpet. The whole job. Because of a new house, so it's basically 1 for 1. There was no significant increase in the value of the house. Now, I'll go to another story. It's like, okay, if you're from Minnesota, then you could really identify with this one. Not all houses in Minnesota have air conditioning.
None that I know of.
Oh, they do now. It'd be hard pressed to find a newer built house that doesn't have AC.
Well, okay, but I'm thinking old school, so.
Yeah. Anything built before 1980 probably,
No
Might
central.
not.
was
Very-
add on. It
Very few little
was
central.
add- I mean, the house that we lived in was built in what? I believe it was built in like 75. It didn't have AC. They added it. We added it later. Okay. Now that was totally out of pocket. That was an expense. They chose to do that because nobody likes sitting roasting in the middle of the night when it's 80 degrees outside and the humidity's 99%. That's a little hard. That's a little uncomfortable. All right. So in this case, people again with severe breathing treatments, that high humidity is hard to deal with. They need air conditioning to dry out the air. So the doctor says, you need to install an air conditioner. Okay, well, houses don't normally come with air conditioning, so we're going to put a central air in, and it's going to, now in this case, it's going to improve the value of my house. All of a sudden now I have a house with central air. It's worth more. What can I write off? The difference between the expenses that I paid and the increase in value to the house.
So if you paid $10,000 to put the unit in,
Mm-hmm.
and it increased the value of your house by $7,500, you get $25.
Right.
Because you're going to get the other $75 to the value of your house.
Now, one last story on this. My mother-in-law installed a wheelchair ramp at her place. No real increase in value. Actually, in some cases, you'd almost make the argument that that's a decline in value. But she can write off the entire cost of the installation of the wheelchair ramp.
Yep.
All of it.
And if she had to have her doors widened and
Yeah, any of that.
whatnot.
Yeah,
Just think about it, but
wheelchair or
in
something.
in the 70s, doors might not have been ADA compliable.
Especially the front door.
Right. So if you all of a sudden are in a wheelchair, your house was built in 1950, and you have to go in and widen all of the doors in your house by a foot, foot and a half, so you can get your wheelchair in and out, that's a medical expense.
It's necessary.
Yeah.
The whole word on this one is necessary. Insurance premiums that you pay for policies that cover medical care are deductible as medical expenses as long as it's out of pocket. When you look at the double D on your W-2, that's not out of pocket. You don't get to write that off.
That's your employer's portion.
Policies that provide for medical and dental expenses, prescription drugs, eyeglasses, and replacement of contact lenses. Medicare Part B, Medicare Part D. Premiums for long-term care insurance can be deducted. Medical insurance premiums paid with pre-tax dollars or reimbursed by insurance company are not deductible. When figuring the amount of insurance premiums that are deductible on Schedule A do not include the amount of premium tax credit. If you signed up for the Affordable Care Act, you're getting that benefit someplace else on the form.
Mm-hmm. Premium tax credit.
Yeah. Cafeteria plans do not include insurance payments paid by an employer-sponsored health insurance. Also do not include any other medical and dental expenses paid by the plan unless the amount paid for is in box 1. If it's in box 1, well then, yeah, you pay tax on it, you get to write it off. Weight loss programs, the amounts that you pay for participation in a weight loss program is specific for disease, including obesity and diagnosed by a physician, are deductible medical expenses. The purchasing of special food is not. I can go buy Weight Watchers, I can't write it off. I can go get Jenny Craig, can't write it off.
Even if you are required to purchase medically specific meals.
Can't write it off.
If you
But
go,
you can write off the food for your dog.
Right. well, doctor says you need to go have a gastric bypass. So you need to go have gastric bypass.
Right.
What you pay for your 8 weeks of classes for the gastric bypass, you can write off. What you have to pay for the actual surgery, all of that, you can write off. 2 weeks before your surgery, when you are required, medically required to eat a specific diet and set of meals, that's out of pocket, you do not get to write that off. Even though in order to have the surgery, you have to eat those meals. Everything else you can write off, except for that
Food's food, unfortunately.
$400 or $500 worth of meal replacement.
Yeah. That's the unfortunate thing is meals are meals. You're
You
going to
think
eat.
that's gonna ever change now the world's?
No, because then if it, I mean that just opens the floodgate.
But you can pretty much make about anything if you know how to, I don't know, how to say it.
You know, I mean, let's just face it. I mean, it kind of opens the. All of a sudden, everybody have a degree of celiac disease, or pick your reason why.
Mm-hmm.
You know, that's a problem, and I don't think that the IRS will ever do that because there's just no way to stop the potential abuse.
I mean, it's like going to Oklahoma, having an Oklahoma address, and saying, "Oh, I got twinges in my back. I need a medical card so I can have marijuana," just because I want to get high.
Weight loss programs. Well, that's another one. Yeah, that's just it. You can't go down to Oklahoma and write off your prescription for medical marijuana if you're a Kansas resident.
Not legal in the state of Kansas,
You can get it, but you can't bring it home.
You can't write it off.
And you
Well,
can't bring it
bring it
home.
home.
and you
Well,
can't
that
bring it
too.
home. Yeah, because the second
That
you-
doesn't stop anybody, but you can't bring it home. You know.
right.
Right.
Yeah, that definitely don't stop it.
And the IRS is not. I mean, they're a little bit more flexible on it at the moment. Lord knows what's going to come up because I've seen arguments going to the counter again. But the IRS has always been, because at a federal level, marijuana is still illegal. So they're not so inclined to let you write off illegal stuff.
Nope, but you can do a tax return on
Yeah. I can charge you for it. I can tax you on the income of doing it, but I can't really let you write it off. You have a prescription for it. Because again, it's a federal controlled substance. You really can't.
The only caveat that I would say to that would be if you were a resident in a state where it was legal and you had a prescription from a doctor, I would allow that.
I would consider
Only
yeah.
because in the states where it's legal, dispensaries are now eligible to file Schedule C tax return and claim business expenses. That's the only reason.
So if you're a Kansas resident, even though you have that prescription, the other thing going to allow you to write off is the paper.
Yeah.
So roll your own. I'll give you a little expenses for the papers.
Now, what if? Never mind.
I don't like the
Stop that!
What?
What if I'm using the hookah? Can I write off my charcoal?
You have charcoal in the hookah?
Yes. The charcoal sits on top.
That's not illegal.
But if you're putting other stuff in it, is my point.
What? It's not relevant. It's just like the papers. I have no problem. It's legal to have the papers.
Okay. So
I know what you're going to do with them,
Right.
but that's not illegal. The
Okay.
paper,
The charcoal's not illegal.
the charcoal's not illegal. And if you use the special water, if you decide to get distilled water, I'll let you do that too.
Okay. That was my question. How far would you go?
If it's legal, I'll probably let it go.
As long as you have the
But we have to have the base of
Prescription.
prescription that from the state that it's legal in.
Right.
if
But
you-
after that, all the other things except for the actual product in Kansas, I'll let you take.
Yep.
Because without all those other things, it's useless.
Right. Right.
Now, if Kansas actually gets off their ass and does the right thing,
Yeah.
Well, there's 6 more states. Kansas and Illinois.
think of all the tax revenue they're letting go to other states. All right. Weight loss programs to improve your general health or appearance do not qualify or not regarded as non-deductible expenses. You just can't go join Planet Fitness because you think you're fat. Even if I was diagnosed obese and told by the doctor to go to sign up for a gym. Probably not. Stop smoking programs, if you go to one, yes, but cannot include amounts paid for drugs that do not require a prescription. If you get prescription stop smoking stuff, I can write that off.
you can get
But this is
prescription.
consistent. If I don't have a prescription, I can't write it off. That's a consistent rule.
Have a prescription for Chantix, we can do the Chantix.
Right.
You want your Nicorette gum, we can't do it.
You go to the programs, even the hypnosis one, you can write it off. Must reduce your medical expenses for the year by all reimbursements for medical expenses you receive for insurance for other sources during the year. Well, if I got paid back, then I didn't have an out-of-pocket expense, or I had a lower out-of-pocket expense.
This is where you see some gray area people.
Yeah. Trying to really work it.
I had a surgery. Hospital billed me $7,500. Here you go. Here's my here I paid $7,500 for medical. Okay. Well, what did your insurance pay? Well, it was $75. Yeah, but what did your insurance pay? Your insurance paid $6,500, and the hospital knocked it down another $750, and you're only out $250 out of pocket. That's all you get.
Yeah. Again, like Matt said earlier, it's not what the bill says, it's what I can prove that you pay.
Right.
And a lot of the times, those are two different numbers.
People get mad.
Yeah, they do. Generally, medical expenses not reimbursed by payments received for permanent loss of a member or function of the body, such as loss of limbs, sight, hearing, etc., or disfigurement to the extent that payments based on the nature of the injury without regard to time lost for work or loss of earnings. I also don't have to pay tax on that either. You don't get to write it off. I can't write off the fact that I lost a finger. That's not a deductible medical expense. But if it was a work injury and I got reimbursed for the loss of the finger, I also don't have to include that in income.
Yep. When I lost my finger, my $22,000 settlement was tax free. Didn't have to pay anything on it.
Moving on to a little bit farther down our Schedule A, taxes paid. We can write off a number of taxes that we pay. So if I skip I had a few notes from OBA.
Yeah.
I'm just making sure I haven't missed anything yet. And I haven't. Not yet. All right. For the tax to be deductible, the tax must be imposed on you and must be paid by you during the tax year. Well, the biggest number on this area is going to be the state and local taxes. And we're going to have lots of proof of that because it's on your W-2. State income tax paid. It's a deduction. It automatically carries to Schedule A. If I lived in an area that had local taxes, it would also automatically carry to Schedule A. That's your best example in the state of Kansas. There's some other things that we'll talk about. So you can elect to deduct either state and local income tax or state and local general sales tax, but not both. Well, I mean, that makes a lot of sense because say I live in Kansas, I can deduct income tax, but my income is so low that I don't have any taxes withheld, or I have little tax withheld. I can instead deduct sales tax I pay. Either what I can actually prove by all my receipts, or there is a table that the IRS has that you can look and then add, make some adjustments. But say like if I lived in Texas, where there's no state tax income, I'm left with what I paid in sales tax as a deduction. Again, there's a table for that and a worksheet that goes along with it. Check the box on line 5 to indicate that you're electing to deduct general sales tax. 9 times out of 10 here in Kansas, income tax is the better rate. You basically have to be retired for the sales tax to work.
Unless you make a big purchase.
Yeah, huge purchase.
If you buy a house or a car and you're paying several $1,000s in sales tax,
Yeah.
it might actually be better to claim sales tax that year instead of your income tax. If your income tax is $900, you bought a brand new car and paid $6,000 in sales tax. What?
Yeah. So when we're talking about income tax, I can deduct all the taxes that are on my W-2. I can deduct any estimated payments I make to the state, whatever quarterly I paid. And if I paid last year for taxes due, I get to write that off too. So typically I owe the state of Kansas $99. I can write off the $99. Like we say, box 17 or your W-2 shows what you paid in state income tax, 19 shows local. That's not a local problem. Kansas City is the closest place that has the local. Other forms like W-2G, 1099-R, 1099-G may also show taxes withheld. Well, the 1099-R for certain. Those other twos are really iffy. Deduct estimated tax payments. Well, I mean, if you recorded it, it's already in the program, so it's doing what it needs to do. I don't have to make. Right now, I'm not talking about anything I got to make a special entry for. I put my W-2 in. The program's already carried it back to Schedule A. I put my estimated payments in, the program's already carried it back to Schedule A. I filed here last year, it looks and see that I paid the state of Kansas $99 in taxes. Guess what? It's already put it there. This year. It just brought it forward. As an employee, you can deduct mandatory contributions to state benefit funds withheld against your wages that protect against loss of wages. For example, certain states require employees to make contributions to state fund providing disability or unemployment insurance and benefits. California.
Mm-hmm. I hate that state.
That state is a pain in the ass when you get them here. But there is it's on there. CA UBI or something like that.
Yeah.
If you see California, let one of us know.
Yeah. Somebody comes in and hands you W-2s, and at the bottom it says that they have taxes for California withheld. At the very least, holler at one of us so we can come over and help walk you through it. If you're wanting to be that big of a glutton for punishment.
Yeah. Once you do a couple of them, they're not so bad, but it's just that first time there's a lot of weirdness going on.
A lot of stuff you have to make sure that you cover that you don't have to do in other states.
General sales tax, and I throw California on the bus because it's the one that's most likely to show up here. They're not the only state. Not by far.
New Jersey
New York,
had those.
Washington, I believe. No. Yes.
Mm-hmm.
So, I mean, they're not the only ones. Just the easiest one to throw under the bus. General sales tax, I can deduct either my actual sales tax paid or the amount figured using the tax tables. Tax tables aren't too generous, so if I can prove more, take more. And that's all your receipts. Sales tax on food, clothing, medical supplies, motor vehicles are deductible as general sales tax even if the tax rate was less than the general sales tax rate. Well, the food right now is not going to help me in Kansas because we finally got to something reasonable. Zero. On food.
But here again, your motor vehicle comes into play. If
Yeah.
you went out and you spent $50,000 on a brand new 2025, and you paid $5,800 in sales tax for that vehicle, and you only had $1,500 in income tax withheld, you might want to take that $5,800 in sales tax that you paid instead of the income tax.
Right. It might actually be better. And there's actually an unintended side effect benefit. If I get a tax refund based off of itemized deductions on income tax, so I get a 1099-G, I have to actually pay state or federal tax on that income next year.
Yep.
If I get my tax refund and I deducted sales tax, my 1099-G is tax-free. All right, so Matt just basically covered the top half of the slide. If you use the actual expense method, make sure you keep receipts. Make sure you scan the receipts. The bad thing about receipts nowadays is that they tend to fade. Take pictures, scan them, do something. Because if the IRS audits you in 2 years and you hand them a piece of paper and they can't read it, it goes to the trash and you don't get it.
And when we say they can't read it, they're going to do this. They're going to take the receipt, go, yep, okay.
Yeah.
They're
They're not
not-
going to sit there with a magnifying glass trying to,
Yeah,
I think I see a 4.
yeah.
No, they ain't doing that.
No.
Nope.
Either they read it right now or it's trash.
Yeah, they're going to pick it up, look at it. If they know immediately how much you spent and what it was for, you're going to get it. If it's faded and they have to work at trying to figure out what you bought and how much you paid, they're going to toss
You're
it.
gonna- Yeah. And you don't get it. So, by God, scan those things.
And unfortunately, telling the adjuster, well, my tax guy could read it, is not going to fly.
Well, even if you said, well, I'm sorry, if you're at the audit with the client, it's like, well, I can read it back then. I know what it was for. No,
Can't read it now. So
can't read it now. I'm not giving it to you.
And don't go over the numbers with pen or pencil so that it's legible.
They're not going to accept that either.
No.
Don't go back and highlight it with your ink pen. Well, this is a 4, this is 1, this is 2, 3. No, they're not going to do that.
Yeah. At that point, they're going to just figure that you went in there and threw a random number in.
yeah, and even though I can read it and I've been writing the numbers in, if it gets audited, yeah, they can throw them out.
Yep.
Even though that she's going through and putting all of the numbers into a secondary spreadsheet.
Hey, you're late.
There, Joe. All right, so on the optional sales tax tables, you can use the actual expense, or you can go to the table itself. I'm not going to spend a lot of time on this because in this state, in Kansas, it's just not going to help. It's not your first choice, and very rarely is it really going to come into play.
The bottom of page 164 is where that is.
You use the tax table, you look at the state, and then it starts breaking it down into localities, and then there's separate columns for how many people are actually in your household. Your household are basically those people that are claimed on your tax return, plus those that you might have signed off with an 8332 they're still a member of your household, you get to include them in your total.
No.
Here's an example of what a sales tax table looks like. So we're sitting in Alabama, Arizona, and Arkansas, and we can see that we have up to 5 members of your household. And you run down the column for what your income was, and they figure out that, well, see here, if you made $250,000 and you had a household of 4, that you spent $1,259 in sales tax. Does that sound like a reasonable number? That's the reason I don't like the sales tax table. I don't think that's very accurate at all. For the entire year, I only spent $1,200 in sales tax.
Yeah.
Yeah. That's why I don't like going this way.
And we don't get people bringing in all of their receipts for every purchase they made so that we can sit there and figure out all of the sales tax they made for every purchase they made all year. We don't. Thankfully.
Now, like I said, there's a way to account for some other local things. So if you looked at Kansas, it would have the Kansas rate up there, 7 and
7.5.
7.5. But remember, if you live in a few certain localities in Sedgwick County, well, actually, if you live in Sedgwick County, there's another 1%, which this is what this worksheet helps you add in. And if you live in a few certain localities in Sedgwick County, there's another 1%.
Like Derby,
Derby,
Garden.
Goddard, Hayesville, Park City, Eastboro, yeah. Those places have an additional 1% local tax there too. So again, that would be accounted for on this worksheet. Moving on, taxes. I can deduct real estate taxes. These taxes are on all real property that you own, house, land, that is not used for business. If it's business, then it's expense on business. Must be paid based on the assessed value of the property and are deductible when paid.
When it comes to real estate taxes as it pertains to your client's home, real estate tax, property tax are the same thing.
Yes.
If you get a 1098 and it shows that the client paid $1,580 in real estate tax, that is his property tax as well.
Yeah, you get to write that off.
Don't
on Schedule A.
don't give him the real estate
Yeah.
tax and then turn around and put that same number basically in for his property tax.
And
It's-
like Matt said, this number generally comes to report it to you on a 1098. Now, if you're not paying the mortgage company, I can actually go to the Sedgwick County website and look up how much you pay the property tax.
Yep.
That's easy in Sedgwick County.
Yep.
Unfortunately, they don't tell you when you paid it,
Yeah.
but
They break it down to, well, it was.
by year.
Now, the other counties around here have it on their website, but it's a little harder. Sedgwick County is easy.
Yeah.
Butler County is hard.
Yeah. And for Sedgwick County, it'll either tell you that they've paid this amount and they owe $0, or they've paid this amount and they still owe this amount.
Which is usually half.
Because in Sedgwick County, you pay your current year's property tax in
December and May.
December, and then you pay the second half of 2025 in May of 26. So in May of 2025, you paid the second half of your 2024,
So you still pay the same
but you still get the half that you paid for 2024 and the half that you paid in 2025 for your property tax in 2025.
So to follow along with what Matt's talking about, I take your totals showing what you paid for 25.
24.
Because
thing. Even though you didn't pay it all in 25.
no, because it's only going to show what you paid.
I'm going to take your total for 24, divide it by 2, and add it to what you paid in 2025.
Right.
Or 2025.
Because when you come and see me in February or March of 2025, I'm only going to have half a payment, what
Right.
you paid in December. But it's going to show that you paid the full amount for 2024.
And I know that half of that was actually
Half
paid.
of it in
Half of that
May.
was paid this.
Now, there are a couple exceptions. I have had some clients who paid the entire thing.
I do.
Yeah, so
Yep.
you tell me that, I'm fine with that.
Well, your paperwork shows when you come in and see me that you
you'll
paid
have
$1,500 for
check.
2025 and you have a zero balance, you get that $1,500 for 2025.
Let's see here. An example of personal property. So there's some personal property tax. These are based on the value, say, like on your car, or if you're Minnesota, boat, jet ski, airplane.
Yeah.
In some states, yeah, airplane, trailer.
Yes.
Don't overlook that trailer.
Nope.
There's a part of that I can deduct, but I need the statement. I just can't say, well, I paid Sedgwick County back in January because my last name ends in A, so my tax expired in February. I just can't say, well, I paid Sedgwick County $500. No, that's not good enough because in that $500 are fees, the fees of the fees, the fees to assess the fees of the fees, and so on and so forth. I can only deduct the actual tax.
The property tax. The fact that you paid $500 to register your car is a moot point.
It's irrelevant.
If
yes.
only $300 of it is property tax.
Right.
So if you're coming in and you're telling me that you tagged your 4 trailers, your 3 vehicles, that's super great. Bring me your registrations for all of those items.
Here's a perfect one. If you look right here, it breaks it down. Right. So the total he paid was $81.25, but 45 of it was registration. Here, $2 was KPH staffing and training. No,
You don't get that.
you don't get that. $1.25, you don't get that. The $24 for motor vehicle property, yes.
That's the
So
property
it would be
tax.
the 24 and the 45. Because you're paying the registration fee. So 45 and 24 is all you're gonna get.
So the registration fee is half, I mean, it's a tax?
It's part of it.
No.
No.
No?
No.
You're not
No, it's a
counting
fee.
it?
No, it's a
Oh,
fee.
okay.
The only
Alright,
thing
so
that you're
they
getting
only
is
get
the
the
property
24.
tax.
Yeah, you only get the 24 tax.
Yep.
If your vehicle
never
is
noticed
taxed
the
on
KPH
weight,
staffing and
you don't
training.
get to write it off. But that's not a Kansas problem.
What?
If your vehicle is being taxed based on its weight,
Oh, yeah. Not in this state. Well, okay.
maybe on highway tractors.
Right. So that's what I was just saying. That's more of a commercial thing where heavy highway use tractors have to pay an additional tax for operating on the roadways. It's
But
called a
that's a
heavy use tax.
Yeah, that's a Schedule C.
That's a Schedule C
expense.
expense.
Or Schedule F if it's a farm-only vehicle.
Yes?
U.S. citizens and residents compute U.S. taxes based on the worldwide income. Sometimes when you live abroad, you have to pay income tax to the country that you're living in and working in.
Dubai.
And so I don't have to pay tax on the same twice. I can deduct as an itemized deduction taxes I paid to a foreign government. There's a tax credit. It's better.
Dubai, Canada.
Well, Dubai doesn't have income tax, so no.
Oh, okay.
France has a tax, but it's based on your net worth, not your income. So therefore, no. That's an interesting one. Huh?
Wait,
No, go ahead.
so your net worth gets taxed every year?
Yes.
In France, yes.
If your net worth.
No matter that you've already paid taxes on part of it?
No, you don't pay income tax in France. They don't tax income. They tax your net worth. So, if
So once,
if Elon Musk was a French citizen, he'd be taxed on his $1 billion
every year?
every year.
Well, no, because
No.
if his net worth was $1 billion this year, he gets taxed on $1 billion this year. Next year, if his net worth is $3 billion, he gets taxed on $3 billion, even though he's already paid tax on the first billion.
Yes.
Right, that's what I meant.
Yes. No, he continues to pay tax on his net worth.
Yes, the more you make, the more you're worth, the more tax you pay.
So that's France for you.
My niece lives here. Her
That's-
husband, and he worked for the church, so that's probably why he worked.
Well, that might be.
He
so-
might be exempt like he would be
Yeah, I
here.
don't know. The only reason why I even know about this rule is I was watching an IRS webinar about the deductibility of foreign taxes paid. And they brought France up specifically because the tax is not income based.
Yeah, some
Yes,
Yeah.
because it's based on their income. Anything that's based on the income.
Is that based on?
No, teletax is not because it's based on screens.
Yeah.
That one's based on screens, but
They'd be able to write it off?
no, because it's based on screens, not income.
Okay. Which I think should be.
Well, it is, but that's how they fund the BBC. Teletax. It's a good thing I actually know what she's talking about.
I know it's called something else.
Yeah, but I knew what you were talking about because I knew of the tax. Thank God for that. You cannot deduct these taxes. You can't deduct your income tax, Social Security tax, FICA tax, Medicare. You can't deduct your driver's, marriage, hunting, or pet licenses. You can't deduct your water and sewer taxes. You can't deduct taxes you paid on alcohol beverages, cigarettes, and tobacco. You can't deduct taxes on gasoline, diesel, or other motor fuels. Ugh. Can't deduct self-employment tax. Can't deduct utility taxes, telephone, gas, electricity, etc. Can't deduct fines or penalties. Get a speeding ticket, can't deduct that.
Now, and this is a pet peeve of mine. I've run into it, and I think Shannon's run into it. If you get a commercial driver that comes in and hands you a stack and says, "These are my parking tickets," you need to find out what kind of parking ticket. If it's a parking
It does say on there,
If it's a parking ticket issued by law enforcement, they don't get it. If it's a $15 parking ticket because they had to pay a $15 fee to park at a truck stop on the East Coast, that is a business expense. They get that.
It's just poor wording of what it actually is.
Right.
And it's on the truck stops because the truck stops actually listed as a parking ticket.
So,
And I've had drivers that'll,
They usually will let you travel too.
yeah,
and you're hoping that it's from Love's, Flying J, something like that.
right. And a lot of times it's just going to be a square piece of paper and it'll say parking ticket $15. I had one preparer that took a whole stack of them and threw it out and said that he couldn't claim those.
Other real estate related items that they can't deduct. Homeowners
She knows who it
Association
was.
charges. Yeah. I left the Homeowners Association. I
I'll bet
had enough of them. Transfer
Maple
taxes or similar taxes charged on the sale of a personal home or taxes such for local benefits that tend to increase value of the property, such as streets, special or sidewalks, sewer lines, etc. So technically, I'm not allowed to deduct your specials because they actually supposedly increase the value of your house. I no longer live on a dirt road because they paved it, and then it's part of my new tax.
Yeah. HOAs, people do not get to take their HOA fees off as a tax deduction.
And here's one thing that they don't pound in, although it was mentioned in a little thing. The tax has to be assessed to me.
HOA stuff's not tax.
No, I'm going back in general. So I can't pay for my mom's property tax and write it off on my taxes.
Oh.
But his mom can write it off on hers.
Because they don't care where the money came from. They just care the fact that it got paid.
Had to explain that to a client last year too.
Yeah.
But
All right.
I paid it.
Interest paid. And the first thing that I'm going to run up here is that although it is above the line thing, so it's an automatic deduction, not Schedule A, you can now deduct up to $6,000 of interest you pay on a car loan. That is way new. That hasn't existed since like the 80s.
Yeah, that just came into effect this year.
Yeah, that's part of OBA. So there you go. I break that up because we're talking about interest paid, and it, like I said, it won't be here. It's a above the board. So it's going to be a direct deduction if you paid interest on a car loan.
And yes, I know it says such as car loans first out the gate, but that is dealing with last year's taxes where
Yeah.
you couldn't.
Right. Yeah, that was last year. This is this year. Personal interest is not deductible. So we're going to move to credit card interest and loan fees. Yeah, back in the 80s, you could deduct credit card interest too. Can't do that anymore.
Not unless it's a business.
Yeah, report deductible interest is on line 8 through and 9 of Schedule A. Most common types of interest you can deduct are home mortgage interest, including points, which is just prepaid interest. You're going to get a form for that. It's going to be on the 1098.
Yep.
Investment interest. Not happen very much, but if I had a bank account, or excuse me, it's not a bank account. If I had an investment account where I'm actually shorting lots of things, I'm borrowing money from the brokerage firm to buy stock, which is very dangerous. But if I'm paying interest on that loan of money to buy the stock, I can actually write that off. Up to the extent of my losses, because it's kind of gambling, and so it actually is limited.
Yeah. I'm going to say most brokerage firms don't do that very much.
No, they don't do that. You'd have to be a very good client to set up an account like that. And like I said, it's easy to get underwater in a hurry because you're shorting things, and all of a sudden it came due, and then what you thought was going to cause the stock to tank didn't. You're screwed.
You're probably a 7 or 8 figure client at that point.
Yeah. I can deduct home mortgage interest only if the mortgage is a secured debt. A secured debt means that if I stop paying it, I lose something. In this case, my house. Again, I have to own the house, or I have to be on the title for it anyway, to be able to write it off. You deduct your home mortgage only if the mortgage is secured by your qualified home. A qualified home is a main or second home. So, yeah, if I have my cabin up in the Colorado mountains and I haven't paid for it yet and I'm paying mortgage interest on that, I can deduct that too. Once I get to my third house, no, not so much. So I can deduct my cabin in the mountains, but I can't do the...
But can I switch if I have my main home, a cabin in the mountains, and a beachfront property in Florida, and I owe more I pay more in interest on my beachfront property in Florida than I do on my cabin in the mountains? Can I switch it up year to year and decide that I'm going to take the interest from this one first instead?
Well, first, who's going to be your primary home? Let's just go there.
Right. But I'm talking about the second.
Second, how much red flag do you want to wave in front of the IRS?
I'm just asking a question.
My answer to that is that you're allowed to take the one that's benefits you the most. Do I recommend going back and forth? No. That's the red flag in front of the IRS. Do I want to get audited? Because they're not going to audit me and just look at one line and say, okay, you proved it, you're good. No, when they audit you, they're going to look at the entire thing.
With a fine-tooth comb.
Do you really want that? But at the end of the day, I'm going to say yes. Because there are other parts of the tax return where I can make the argument and successfully lobby saying I'm allowed to take the best possible result. Do I own the property? Yes. Did I pay interest on it? Yes. Is it secured by the property? Yes. I've met all the criteria to say yes.
Is it dangerous?
Yes. It must provide basic living accommodations, including sleeping space and toilet and cooking facilities. A houseboat counts.
Yep.
And if you live in Florida and some of those other southern states
tiny
with harbors, that's where people live. They don't have a house. They have a houseboat.
The new wave of tiny homes,
Yeah.
400 square foot homes.
Hell, it's nothing new. Yeah.
They have a sleeping space, they have a toilet, and they have cooking facilities. It's eligible.
Mm-hmm. You deduct your home mortgage interest only if the mortgage is a home acquisition debt. Home equity interest is not deductible. Again, it's going to show up for your 1098. I'm not really worried about it. But if somebody starts talking about home interest, well, I paid this much in equity on interest. Sorry. You don't get to deduct that. Excuse me?
You didn't tax on a HELOC loan?
No. No. It's like, the other way of looking at it's like those reverse mortgages. That's not taxable income. It's not the greatest idea, but it's also not taxable income. RVs, no, because that is, although I would make the argument now that that would actually fall under this other rule about the vehicle. With RVs as a general rule, no, because you're not going to secure that property with a mortgage.
Yep.
You're going to get an auto loan.
Even though it has a sleeping space, a toilet, and cooking facilities, you're not going down to Fannie Mae and getting a house mortgage to buy a $60,000 RV.
Yeah, but there's people I see on media, you know, that they live in RVs now.
Right,
No, that's true. Some of those tiny houses wouldn't actually count
right.
because they're too portable. Which is stupid because I can make the same argument for the houseboat where I can't get the mortgage, but never mind that.
Yeah, with a modular or a mobile home, there's two different things.
That's not necessarily mobile.
Right.
I mean, yes, it's on wheels, but it's a production.
You leave in a 10-minute notice.
Yeah, I can't be gone in 10 minutes.
The determining factor is going to be what kind of loan are you taking out for that. Even if you were dropping $1 million on a Class A motor carriage, you're not getting a home mortgage for that motor carriage. You're getting, in essence, a vehicle loan for that. And that the type of loan that you're going to get is going to determine whether or not you can take mortgage interest on it.
Right.
Because with an RV, with whatever, it's not you're not gonna get a 1098. You're not gonna get a mortgage interest statement. You're just gonna get a statement from the bank saying, hey, you paid this, and this is how much interest was on your payments for this year. But it's gonna be an auto loan, basically.
Yeah, I'm waiting to see what the new form is to report auto loan interest paid.
I'm going to assume that the bank is going to issue something like a bank statement on their letterhead, and it's going to say what you paid for your auto loan, and how much of that auto loan was interest.
Yeah. Either that or they modify a 1098.
How about mobile homes?
Mobile homes are more permanent, so yeah, I could take a home loan on a mobile home.
Yeah.
I could get a mortgage on a mobile
Even
home.
though those things depreciate like crazy.
Yes.
Yeah.
It's a big risk for you. Because if they foreclose, they're most likely not going to get the value out of the mobile home for what you owe for it.
Exactly.
So you're still going to be underwater.
Yep.
You're underwater probably in most the entire time. 1098, this is what it looks like. It's coming from the bank. You're praying it's coming from a bank. Bank of America is terrible about issuing 1098s. You have to beg them to send one. And mostly you're better off just trying to figure out how to download it.
Yeah. I mean, hell, Bank of America won't even issue out friggin' deposit slips.
Yeah, they're terrible. Oh, they're terrible. I hate the fact that we're using Bank of America because they want stick your card in there.
I'm lucky. Mine's a block and a half from the office, and I just walk up to the business side, and I hand them my account card number and tell them I need to put X amount of dollars in there. And they're like, okay, and I hand them my driver's license. And it's actually
At
pretty
least you
smooth.
have a business line. The one that's down here, it's only a mile away. There's no business teller.
Oh yeah, mine's got a business teller in
Lucky.
there.
All right, home mortgage interest. There is a limit. If your house is worth more than $1 million, the amount of interest that you can deduct is capped. So we're not worried about that. If I prepay points up front, when I first open the mortgage, I can actually write it off because I'm prepaying interest, and I can write off home mortgage interest. So that's not a problem. Now, if I'm refinancing and then paying points, I can't write it all off at once. The bank will actually issue the correct 1098 for you, so it's less of an issue. But if I'm prepaying points on a refi, I actually have to spread out my points for the life of the loan. But again, the bank understands the rules; they will issue the 1098 accordingly, and that covers points. I'm trying to tighten it up a little bit because I got 15 minutes. Investment interest I've already covered for you. Gifts to charity, line 1. So what was that?
2,000,
Nah.
1,000 and 2,000.
Is that what it was?
1,000 above the line for single head of household, 2,000 above the line for married filing joint, cash contributions only.
Yes. Yep. Yep. So your single head of household can take it $1,000 above the line deduction for interest or for charitable donations of cash. Married filing jointlies can do $2,000 above the line deduction. Anything that goes past that goes to Schedule A in the section that we're going to talk about. So I can donate money to the local NPR station, and I can write it off without having to file Schedule A.
Or your ties to the church.
Ties to the church, I can write off. But some people that really have good tithing, $2,000 on married filing joint, not going to cover it. What's going to be left over is going to go to Schedule A.
Yep.
These charitable contributions or donations or gifts to the use of a qualified organization, it's voluntary. I'm doing it just because I'm a nice guy, and I don't expect to get anything from it. And if I do, I actually have to adjust the amount of my donation. So if I donate to the local NPR station, they send me a coffee cup, I actually have to deduct the cost of the coffee cup that I got in return from the amount of my donation. It'll be in the letter.
It'll tell you how much the coffee cup is worth.
Yeah. You'll get a letter from KMUW. They'll say, you donated $80. We sent you a coffee cup. It's worth $20. Your net deduction is $60.
Yep.
And that's your receipt. And that's cash. We can also deduct non-cash. Fill up your truck with junk from your basement. Go down to Goodwill. I'm going to tell you that,
That's not going to be an above the line adjustment for
that's
this year.
never going to be above the line. And once you go over $500, it gets even more complicated. Because they're going to want to know who you donated it to, when you donated it, and what was actually in the load. You just can't say 5 bags of clothes. No, you have to say 3 shirts worth $3, 5 pairs of jeans worth $10.
And if you don't, the IRS has a handy-dandy little chart. So if you come in and you tell me you've donated 15 bags to Goodwill, and 3 bags were full of shirts, 4 bags were full of jeans, 5 bags were full of toddler clothes, I can actually go to a list that the IRS has put out and tell you how much each bag is listed as being worth by the IRS, and that's what you get.
It's
Yes.
per item.
No,
And
per bag.
They listed,
Yeah.
they listed so many shirts, you still go by it's per item.
No, it's per bag.
They go per bag, although you can go find other charts that have
Yeah,
a per
but if it's
item.
mixed,
If it's a mix, then you got to figure it out.
yeah. But like you said, 5 shirts, 5 pairs of pants,
Yeah.
each separate.
And there are places where you can go online to find. And remember, this is thrift shop value.
It's listed Goodwill, and then it says a shirt, a suit. What else do we find? Golf clubs. I mean, it lists everything you could possibly donate.
Yeah.
And it gives you a
Dollar amount.
But my point was, I don't give a damn that it was Calvin Klein jeans fresh off the shelf. And you want to try and write off the fact that those jeans go for $500. No, they're
It's
blue
not a
jeans.
thrift item.
You bought those $500 jeans at Macy's in New York City. came home, never warmed, tags still on them, donate them to Goodwill. $5.
$5. Brenda had a great story because I wish she was here because she had a great story for that one. And that was it right there. They were Calvin Klein's, man. I want to write off. They're worth $1,000. No, they're not. They're blue jeans, $5. Oh man, that lady was pissed. But Brenda's right. Thrift shop value.
Mhm.
What Goodwill is going to sell it for.
Like blue book value on a car.
But there's no longer $5.
Not anymore.
But that was the point.
Yeah,
Right,
yeah.
right.
It was.
I don't care what you. It could be a brand new fur coat that you never wore. It could be, studded with diamonds. It could be worth $1 million. No, it's not.
If you take the leather suit that Elvis Presley wore at his last concert and donate it to Goodwill, you're not going to get the $3.7 million you could have got if you sold it at auction.
Yes.
You're going to get $25.
Well, there is a caveat to that one. If I
It'll
can,
never make it to the store. It'll go online.
Yeah.
It'll go in an auction.
if I can prove with valid documentation that my donation was worth more than the thrift shop value, then I can deduct that amount. So if I can prove through an independent third party that this indeed was Elvis's last costume,
You get to deduct the cost of.
I get to deduct the cost of the costume.
Or doing the appraisal.
With
The
a
value,
valid
the-
appraisal.
The valid appraisal, and it's got to be, my example is always, and I like your example just as well, but, I've got a rusty piece of metal here. What do you think it's worth to donate? Rusty piece of metal, anybody? Nothing.
Nothing.
I got a certificate that says it's actually part of the Titanic. What do you think it's worth now?
Nothing. Oh,
Well, to me it's nothing, but to other people that would be almost priceless.
Right,
And I want to donate it. Well, Matt's right. Go to auction, you'll clean
Yeah.
up. But
that's not something you want to try to take off your taxes.
yeah, I kind of jumped. Yeah, this is automatic audit bait right away. But here's the other thing. It's not going to help me a lot because I am capped on how much I can write off in a particular year. Now, the good news is that what I don't use this year will carry over to future years until I use it up. But was it really worth it to donate Elvis's last jumpsuit? No.
He's not dead.
Yeah.
yeah.
He might be now.
I was gonna say they say that there was a
He's
guy
not.
in Montana.
No, he's somewhere around, but he's a preacher and they have DNA proved it.
Yeah, it's like in Montana or somewhere like that. I saw that.
All right.
I don't
well,
believe it, but
Take off my tinfoil cap now.
Yeah,
Yeah.
exactly.
Brushy Bill Roberts.
You can deduct charitable contributions only if made to qualified organizations like churches, federal, state, and local governments, and other organizations as approved by the IRS. They'll let you know. You know what it is kind of already off the top of your head. If I donate to the WSU Scholarship Fund, that's deductible. If I donate to the Friends General Scholarship Fund, that's also deductible. Newman, church, don't care. You've got an idea of what is a deductible.
Mm-hmm.
I donate to George down the street, not so much. The cost of a raffle ticket's not deductible as a charitable contribution, even if the ticket is sold by a nonprofit organization. Remember when we talked about some of these rules that seem a little bit obscure? The reason why they're here is because somebody actually tried it, and the IRS eventually got to say no. Whether in front or actually, most likely, it made it to tax court and it was ruled by a judge.
Mm-hmm.
IRS considers raffle ticket to be a contribution in which you benefit. I'm buying chances. I get something in return. I got a chance to win. Is it a deduction? No. It is deductible as a gambling loss. Girl Scout cookies is a good example. Kinda. You can try it. I don't recommend it. What's the Girl Scout cookie box going for nowadays? About
$6 a box.
$6. At one time, you could go onto the Girl Scout website and find out that for every box of cookies, they actually got like $3 to them. So your donation would have been $3 per box.
Popcorn season right now.
Now, am I going to write that off? I'm going to allow you to write that off? No, not really.
Mm-mm.
And in fact, I believe the Girl Scouts actually took that information down so people would stop doing it. Deductible items include, of course, money. Dues, fees, and assessments paid to qualified organizations above the value of the benefits received. So, if I pay my membership fees and I go over, because the intention is that I want to pay membership fee for somebody who can't afford it, my overage is deductible. Used clothing, furniture at fair market value. The cost and upkeep of uniforms worn while performing donated services but not suitable for general use. That's a little bit different wording.
Mm-hmm.
Because usually they were just pointing at, well, like I paid for dry cleaning for the high school band, marching band. I cleaned their uniforms. Now I'm looking at that thinking, well, let's see here. If I'm donating my time as like a doctor or a nurse, and I get my
lab coat
gets
my-
soiled
my
and I get
scrubs.
cleaned, I'm looking at that now saying I can deduct the cost of cleaning it.
Right, because I wouldn't just walk around in my scrubs or my lab coat.
Well, that's, yeah, but this is in relationship to actually performing the charitable act.
Right, but you got to take into account the but not suitable for general use.
Right.
So at that point, I would take it back to what would we give a deduction for on a Schedule C for a uniform.
Yeah, you're right.
So if we kept it like that, a truck driver buying flannel shirts and a pair of blue jeans, that's not a uniform.
No.
But a
Buying the
police officer buying a uniform specifically for his job, that's a deduction.
Let's hear. I can write off unreimbursed transportation expenses that directly relate to services I'm giving to the organization, including fares, tolls, whatever, 14 cents a mile. If I'm running leg work for my charity, I get to write off 14 cents a mile.
Yep.
To and from. If I give over $250 or more, I have to have a statement from the organization showing the amount of the gift, the description of any goods or services provided in return. If I don't have more than $250, if I'm not writing down more than $250, I don't have to worry about breaking it out of who I gave it to, when I gave it to, and what was in the load.
Right.
I can deduct things that I give to churches, synagogues, mosques, other religious organizations, federal, state, and local governments if your contribution is solely for public purposes. You can't write off a deduction of the fact I paid my federal income tax. Ooh, it'd be nice, but I can't do that.
Right.
Nonprofit schools and hospitals, Salvation Army, Red Cross, CARE, Goodwill, United Way, Boy Scouts, Girl Scouts, Boys and Girls Clubs, etc. War veterans groups, expenses paid for a student living with you sponsored by a qualified organization.
Exchange student.
Yeah. Out-of-pocket expenses where you serve a qualified organization as a volunteer. Things I can't write off is money you give to civic leagues, local sports clubs, labor unions, foreign organizations except some Canadian, Israeli, and Mexican charities. So I can't give to the Swiss Red Cross. I can give to the American Red Cross. I might be able to give to the Canadian Red Cross. Groups that are run for profit, groups whose purpose is to lobby, so I can't donate my donation. I can't deduct my donation to the NRA.
Nope.
Homeowners associations and individuals can't deduct the fact that I gave money to the Democratic or Republican Party. But a bingo card, nope. Dues, fees, paid to country clubs, nope. Tuition, no. Value of your time, no. Can't deduct the fact that you did that. Donated blood, no.
Down at Broadway because we have that place next door.
That's
Oh
income.
my God, yeah.
You know how many people tried to go back to that company and get a printout of what they were paid out to use it for earned income credit?
I believe it.
And how many times we had to explain to them?
It's not earned income.
Yeah.
It's a donation, isn't it?
It's a paid donation.
Yeah.
Yeah. It's paid donation. It's not classified as earned income. Sorry.
All right. So donating property, you can only deduct the fair market value. And if it's something that's kind of a collectible, we need an appraisal from a appropriate appraiser. I'm trying to tighten it up for you.
Yeah, that's hard to find nowadays with all the people selling stuff on eBay and.
Yeah.
Yeah.
Although, I can kind of look at eBay and use that as because what's more fair market value than an auction?
Yeah, that's true.
So if I look at eBay and I'm not looking at what's currently listed because that's not sold. I'm looking at the product of the last few times that it actually sold because that's the value.
Mm-hmm.
So I can glean a fair market value off of that and feel somewhat confident that it'll hold because it is a public auction. I mean, there's nothing more fair market value than an auction. All right, so that $250 we talked about earlier was actually in cash. The $500 here is for donated items. Items. Plates,
Clothes.
clothes, golf clubs, whatever, teddy bears.
Cleaned out your storage unit and took it all to Goodwill.
Break $500, fill out this form. Have fun. Like I said, if I donate, one of the things for a while was donate your car.
Yeah.
Well, if I do that, I'm expecting to at least get a 1098C because I'm only going to be able to write off one of two things. If they kept the vehicle for their own use, I get to write off the Blue Book value of the time when I donated. Most of the time, though, they're going to take the car down to auction and sell it. And so I get to write off whatever they sold it for. They'll send me a letter.
Mm-hmm. And the same thing if you donate a car to Goodwill and Goodwill fix it up and donates it to a needy family, whatever the fair market value of the vehicle was at the time
Of the
that
donation.
you donated it. You don't
Yeah.
get to throw in all of the repairs and everything else that they may have done to that vehicle.
Well, yeah, a better example is I donated a minivan, they converted it into a wheelchair van.
Right.
I don't get to deduct the cost of conversion
Right.
unless I pay for it up front.
Yeah. If you converted the minivan into a wheelchair van and then
Or
donated it.
yeah, or gave them like a gift certificate. Here's the van. Here's a gift certificate for that place over there. They'll convert it. It's already paid for. Yeah, now I can write it all off.
Yeah.
Basically, when you're going to be deducting this stuff, you better have documentation because this is one of the places where the IRS is a stickler. You start throwing out big numbers, they're going to want you to prove it. So keep good records. All right. Used to be, before 2018, I could write off personal casualty and theft. Somebody steals my car. If I didn't get reimbursed from the insurance company for my car, I can write it off. Could have. Back then, not now. Now the only thing I can write off is the fact that the tornado wiped out my house and now my neighborhood was declared a federal disaster area. And I can only write off the amount of what the insurance didn't pay me back. And even at that, it's terrible.
Yeah, because usually they want to go with what's the value of the house as it stands before the insurance company was paid off. Not what was it worth before the tornado came through. What's it worth right now?
Mm-hmm.
So if you had a $150,000 home, the tornado came through, demolished it, and it's worth $50,000, and the insurance company gave you $75,000, you don't get nothing.
And even worse, if I'm going to write it off, what if I have any out-of-pocket expense or something that wasn't reimbursed for? I'm also subject to the 10-100 or the 10-100 rule. I got to deduct $100 off the top, and then I'm limited to 10% of my adjusted gross income. So I have to exceed 10% of my AGI before I can deduct my first dollar. So, hope the tornado hits your neighbor's house, not yours.
Yes.
Some other miscellaneous itemized deductions. Most of them we're taking out, like 2106.
Yeah.
Unreimbursed business expenses. Used to be if I bought something for use here at work and I'm a W-2 employee and the boss didn't pay me back, I could write it off on my taxes. Can't do that anymore. Except there is a new one that is not on here, but I've seen it. Teachers. There's an adjustment in income of $300 per teacher on tax return of expenses that they use for classroom. There is now an allowance to Schedule A. If I spent more than $300, whatever I had left over goes back to Schedule A.
What do you mean? So if I'm a teacher and I spent $500, I get $300 off the top, and I
As
get
an adjustment to income, and
and I
can
get
take
$200 on Schedule A as a charitable contribution.
no as a deduction. We're out of charity. We're in other itemized deductions.
Oh, okay.
So 2106 is kind of back, but not back, because it's not the form I'd be using. I don't know what the documentation is on that one necessarily. What how it's really working. I'm just hearing that it's there.
Okay.
Like for instance, this last week I dropped $500 on toner for Crystal's printer.
Oh, well,
That's the third time this year. So, there's an example, and that's just toner. I haven't talked about other things. I'll save the political commentary. Basically, another itemized deductions right now is your gambling expenses. You can write off your gambling expenses up to the amount of your winnings minus 10%. So I can only deduct 90% of my gambling losses relative to my winnings. So automatically, 10% of my gambling winnings will now become taxable income.
Yep.
That's not going to make some people happy.
no, because we have a lot of steady gamblers.
Both offices have a number of people that's their entertainment. Some people go to the movies. Some people go to the casino.
My Asian couple that used to come in would bring me $70,000 worth of gambling winnings in W2Gs, and turn around and show $140,000 paid out.
The casinos, they give you a form, right?
They do, but
The IRS doesn't like it. The IRS wants this.
You have to ask for that form. It doesn't just
Yeah.
generate come to you.
And still, the IRS doesn't necessarily buy it because I can give my casino card to anybody and you go swipe it. Does that mean I was there? No. Can you prove I was there? No. Can you prove it wasn't me? No. The IRS doesn't like that. This is what they want. They want you to keep a log. For example, in gambling losses, you must enter the date and type of specific wager or wagering activity, the name, address, or location of the gambling establishment. That's fine. That's on my W2G. The names of other people present with you at the gambling establishment. Hopefully you went with somebody that you knew. The amount that you actually lost. Like I said, you need a journal now.
I went in, spent $2,000, didn't win a damn thing.
I can't even do that. I have to say, hey, I spent, I was at the blackjack table for 2 hours and lost $200.
Yep.
Then I moved over to the slot machine because I was pissed off and lost another $200. And my wife was there watching me blow up and getting mad at me for blowing $400. Well, at least I have documentation.
Right.
So those losses, let's say you didn't win it, at
You're
the
screwed.
end,
You're screwed.
no tax deductible or anything.
Not a
for
dime.
Losses.
Not a dime.
It's always versus the winnings.
Always versus the winnings, and I have to have winnings to be able to deduct any losses. And like we said now, I'm only deducting 90% of my losses.
You spend $10,000 at the casino gambling and don't win a dime. The casino thanks you for your contribution.
Yeah.
And you don't get to write any of your taxes. Hopefully they comp you at least a dinner. Like I said, you can elect to itemize even if it's not your best result. Just tick the box. Some people need to do this for whatever reason. Other people, like I said, you can take the result that's best for you or whatever works for you. It's your choice. There's not a law that says you must itemize. Well, there is one law that says you must itemize. That's the married filing separately, and the other person itemized. But otherwise, there's no law that says you must itemize. Even if I could itemize, and I chose not to. I'm not required to, even though I could have. Maybe my Schedule A was valid, but was only valid for a couple $100. Do I really want to mess with it, knowing that I'm going to have to pay tax on my 1099-G next year? I might not. I might elect to take the standard deduction.
Or let it walk by.
I'm not worried about it.
Yeah, I saw him.
So if you itemize this year, you gotta itemize the following year.
No.
No.
Okay.
Itemization is a year-by-year thing. All right, so income tax is a tax on the percentage of your taxable income. The method that applies to you generally depends on the amount of your taxable income. Other calculations that are required to either the tax table or tax formulas. And so we go through here, trying to figure out.
This is for capital gains.
Well, no, not all of it is.
Yeah.
So the tax table, when I have my taxable income number after I get my adjusted gross income, I take that number after I do my standard deduction or my itemized deduction, I take that number and run back to the tax table if the income is less than $100,000, or the tax formulas if I'm over it. First, you take a look at the left-hand column, find out where you fall in the tax income. Then you read across the column for your filing status. Where those two meet, that's your tax. Let's hope you had enough withheld or enough credits to pay for it.
Yeah.
If your status is QSS, use married filing jointly. So here's an example of the tax table. We're in the $39,000 to $45,000 range. Our clients here have $39,974 in taxable income, so we run that over. They're married filing jointly, so we see that they owe $4,333 in tax. Thankfully, with the computer program, you will never look at this table ever.
No, this table went away when we quit doing them by hand.
Yeah. And by the way, if you actually look hard at this, you can see that this says $39,950 and that says $39,950. If I'm actually at $39,950, I have to use the higher table.
Yep.
The higher row. So it really should say $39,49. It really should say that, but it doesn't. So like we said, if you looked at that, you see the married filing jointly, we're paying $43.33. If you're single, you're paying $45.65. That's the difference between the single. All right, head of household, you can see that they would be paying $44.56. Well, better than single, not as good as married. Adams filing singles taxable income is $27,150. Like I said, if your net income falls on the threshold of the two, you got to go to the higher row. If you're over $100,000 in taxable income, you start using the tax formulas, and this is the example of what the tax formulas look like. But not only are there different tax formulas for the different filing statuses, which is what you would expect, by the way. I mean, you saw the different rows in the tax table. That continues onto the formula, so each one of these is a different filing status and box. But then you look at the different rows, and you can see that even though I'm over $100,000, it still matters how much I make because there's additional breakdowns inside of here.
The more you make, the more you get hit.
Yeah, basically. So again, each one of these rows represents a new tax bracket.
Yep.
And again, you'll never see that. I mean, the computer will handle it for you. So I'm not going to stress on this very much. I've already kind of talked about capital gains as we went along because depending on my adjusted gross income, capital gain tax rate might be 0.
Yep.
In fact, for most of our clients, the capital gain tax rate will be 0.
Capital gains are calculated independently from your W-2, right?
Yes.
No, they won't be on your W-2 at all. So yes, they will be independently. You might see them on a 1099 DIV, or that's the most likely place that you're going to see them. I mean, because after that, they might show up on a personal return if you're in business. If I was in business for myself and I sold a capital asset, then I have a capital gain potentially. So,
Typically for us, we find the capital gains distributions on 1099 DIVs that are attached to brokerage information. So somebody comes in from Edward Jones and we open it up. The first thing we look for is a 1099 INT, 1099 DIV, 1099 miscellaneous, and a 1099B. Because it's from a brokerage firm, the chances that there's capital gains on there is pretty good because you're dealing with stocks and bonds and capital
qualified
assets.
dividends.
Right. So the 1099 DIV on a brokerage firm information sheet is where you're going to see that DIV or capital gains mostly.
But if you get like let's say a Boeing worker that he's already started doing some sort of cash withdrawal from 401k.
That's a 1099R.
Okay, so the
Chances of that having capital transactions on it are very slim.
Yes. So if you've put into Boeing for 40 years and you're retired and you've started drawing a pension from your 401k through Boeing, all of that income is going to come down on a 1099R.
Yeah.
Retirement.
Yeah.
But I mean, if they still working, because once
Even
past
if-
59 and a half, you can start taking money without any
Right.
That's not.
penalties.
But there's no capital transaction.
Right. It's still going to come down, even if you're still working for the company and you're pulling from your 401k that you paid into with that company. You're still going to get a 1099R, more than likely, code 7 or box 7, code 7, normal distribution, because you're over 59 and a half. So there's no penalty for drawing out anything late. So it would be considered a normal distribution, even if you're still working for the company. There's no capital gain to any of that. It's income. It's unearned, but it's income.
So, but it's still gonna be part of your.
Yeah, you would
your
get
income.
yes,
your
you would get a-
AGI or what is it?
your adjusted gross income.
Your
Yeah.
adjusted
Yes.
gross income, your taxable income is going to be in that section.
Yep. Yeah, it'll show up by line 4. Annuities and pensions.
All right. So, what's your maximum the capital gain tax rate? Well, it depends. First of all, what I'm selling. If I'm selling baseball cards, that's a collectible. 28%, regardless of anything else.
Elvis's jumpsuit.
Yeah. But we can see that most of our transactions are going to fall under this category. Our 1099 DIVs with the capital transactions on are going to fall into this category. So we can see, like, I've been talking a lot about your capital gains aren't going to be taxed at all. And this is the reason why I'm talking about it is because the single people have to make more than $47,000 before any of their capital gains become taxable. Now, are they paying income tax? Yes, they're paying regular tax on their wages and such, but their capital transactions aren't being taxed at all. You know, married, filing, jointly making $94,000 before I'd start taxing.
You think about it. If you had $15,000 in capital gains and made $25,000 in income, you're only getting taxed on the $25,000 of income.
Right.
The $15,000 of capital gains is taxed at 0%,
Yeah, it's tax free.
even though you got that $15,000.
So when you're selling capital assets, if you have control over it, make sure that you're doing in a year that you're not making a lot of money.
Yep.
To minimize your tax exposure. But even at that, it's like, look at this, is that, okay, so now that I'm start taxing capital gains, look at my top rate on this,
500.
$500,000. 15%, that's a discount. You know how much I'm paying in regular income tax at that level? Well, at $500,000, I'm paying 36%. That's a
Yeah.
hell of a discount. I'll take the capital gains tax rate.
Yeah. Think about it. $100,000 in capital gains, $30,000 in income. You're only going to pay 15% on that $100,000.
Right.
Instead of having to go to the chart and figure up income tax for $130,000.
Right. So I think we've covered our capital gains pretty good.
Yep.
And we've already talked about whether or not you owe or get a refund.
Yep. And we're
And
done.
so, have a nice day.
And we're done.